on even the fixed income space, on bonds as well. So it'll be interesting to find out what he has to say about all of that and more. We're down to the last seconds of this particular show though, but then we've got lots lined up, starting with Ask Profit. That is up next. Thanks so much for watching. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On editor.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima Vachajani, and it's a decent Friday session to say the least. When you pull up the markets, it's been a good week above the 24,000 number and continues to be one where we are now comfortably in the green. So the implied open indicated a mild start in red. Now up 86 points, 24,280 at this point of time. Now closing in on 24,300, but even if you're able to maintain and in this week about 24,200, we'll take it with both hands at this point of time. The heat map shows you a similar perspective. In terms of stocks, you've seen the Nifty Metal and Auto names continue to help the markets. And today, surprisingly though, the biggest gainer for the Nifty 50 is HUL. It's up 4.9%, has been a key laggard over the last 5 years, something that you might have heard Mahima talk about. Tata Consumer, ITC, Trent, all of those in the top 5. So you're seeing the consumption pact continuing to be back in focus now. So is Maruti Suzuki as the top 2 gainer, at least for today. You're also seeing Nestle seeing some buying, and so is Apollo Hospitals and Kotak Mahindra Bank. But largely, almost 35 to 36 stocks are right now in the green, and it's positive, while IT is largely divided. TCS is in the green, but Infosys is in the red at this point in time, and so is Wipro and HDFC Life, both reacting to earnings. In terms of the sectoral impact though, let's pull that up, because you've seen the names in the Nifty FMCG dominate the Nifty 50, and that is visible here as well. MNC, media, energy are some of the other ones that are gaining, while IT is down by 0.16% at this point in time. But the advanced decline ratio is the other key factor. Now, it's been a good day over the last 2 days for the broader markets. They've been outperforming the benchmarks, and today again, almost a 4:1 kind of gain for the advances, and that has built through. So over the last 1 hour or so, there is historical evidence that the broader markets are favorers of the advances, and Mahima, that's visible in the mid cap and the small cap performance also at this point of time.
Yeah, absolutely. I mean, if you can try to pull up the mid cap and the small cap 250 doing better than the benchmarks. The mid cap 150 is up around 0.8 odd percent, and small cap 250 is seeing gains about almost 1%. Slightly off from its day's high point, but still trading with an uptick of around 160 points for the small cap 250. Let's try to put up the BSE 500 to see as to what are the counters that are buzzing in trade right now. You have MMTC topping that chart, up 14%, followed by VSC Industries on the back of numbers coming in. The Q4 numbers were not exactly comparable because of GST and excise duty uptake and the cess relief. But in terms of overall growth, in terms of volumes, that's where I think the positivity in the stock is coming in from. GSPL, Ircon are some of the other names. Gujarat Gas, they're seeing an uptick in that range of 6 to 13 odd percent. But on the flip side, you have HDFC Life on the back of numbers, Wipro on the back of numbers as well, and Eureka Forbes and Kalyan Jewellers, some of the counters that have seen a downtick of around 2 to 3% each. But let's start taking your stock-related questions, and we are now joined by Sameer Dalal of Natulal and Sons Stockbrokers and Somil Mehta, Head Alternate Research at Mirae Asset Share Khan, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start up by taking our first caller for the day. Pradeep is calling us from Visakhapatnam. Pradeep, a very good morning to you. What's your query about?
Yeah, very good morning, and thanks for taking the query. It is regarding Geo Financial. Is it the right time to enter into the stock right now?
Pradeep,
I'm looking for 3 to 6 months.
3 to 6 months. Okay, all right. Pradeep, got your question. I'll take this up with Somil then. Somil, a very good morning to you. Your view on Geo Financial?
The Geo Financial at the moment has been consolidating about 20 daily moving average. It has broken out of an ending diagonal pattern on the daily charts, which is a good sign at this point of time. Now, I would suggest keep a very, very strict stop loss around 235, because it has not given us a confirmation on the breakout. So keep a stop loss around 235, very strict one. Once it breaks out above 245, 246 levels, I think the next target would be 260 and 265. So these are my two targets for Geo Financials.
Got that view, Somil, and welcome to the show. The next question coming in is from Kaushik from Baroda itself. Now, his question is on Bajaj Housing Finance. He's bought shares at elevated levels of 136, asking what he should do with the 74 shares. Now, Sameer, good morning and welcome to the show. How are you viewing this counter? Now it's seen a revival post touching that 75-hour mark, but is it still a case that is enough to average down at this point of time from 136 level or that Kaushik is bought into?
Good morning, Puneet, and good morning to your viewers. My view on Bajaj Finance for some time has been that this is one of the most expensive on valuation basis housing finance company, right? It's just getting this premium because of the Bajaj brand name and because the other two Bajaj financing companies, I won't say finance, but Bajaj Finserv and Bajaj Finance have done so well. So everyone's expectation was Bajaj Housing Finance will kind of replicate that. But you got to realize that this is a highly competitive space. Margins are not as great. Yes, Bajaj Housing is doing a differentiated model where they're doing a lot of lending to businesses that buy properties and rent them out. So it's the corporate side lending and not purely on the consumer. I mean, the person buying a house for his personal stay. So that part of the business does earn them a slightly better return. But if you compare valuations across the board, with it being high, for me, this stock is going to be a market performer at best. And if you compare it to the rest of the housing finance industry where valuations are cheaper, I think it'll underperform over the next maybe 2 years. So for me, buy something like a LIC Housing Finance, which is a high dividend paying company, or a Sammaan Capital, which is, well, Sammaan is now diversifying, but it used to be a housing finance company. Those would be where valuation comforts are there and growth opportunities will also ensure that these companies do better than a Bajaj Housing Finance.
Okay, so that's the view coming in on Sammaan Capital. We've got Pushkar calling us from Delhi. Pushkar, a very good morning to you. What's your question about?
Yes, I am holding NetWeb Technologies 113 shares at 2315. I have a horizon of 2 years. Should I book some profit and wait for lower levels or continue to buy more?
Okay, got your question. I think we've got one more question coming in on this particular counter from a long-term perspective. Our viewer who's bought it, I think it's the same query. I think you've sent the same query on WhatsApp also, I believe. Okay, so Pushkar, taking your question with Samir then. Samir is sitting on a profit of around 1.7 lakh rupees already on this one. What should he do?
We don't have active coverage on this counter, but I mean, I have studied it. So what I can say is the valuations are a bit rich. But given the fact that they're focusing on the data center space, and I honestly don't know how the revenues are really, why we've not taken it under active coverages, I'm not able to understand how we are going to be able to generate the higher revenue because competition in the space is going to increase, right? So from that perspective, I had a worry and which we've not covered, but the business model that they're in is doing well. That is a growth engine, but valuations are a little high. So should he book a little profit? It wouldn't hurt to take a little profit off the table. Maybe you can review it maybe 6 months down the line, and if you get it closer to 3,000 levels, you could probably add back.
Got that view, Samir, but definitely Pushkar bought it at a decent price. So good on you, Pushkar, for that. Next question is on Vari Energies. Now a viewer, Sri Kumar from Hyderabad, wants a 6-month horizon on this sawmill. Is it a good time to buy is what his question is.
Vari Energy has just broken out of a triangle pattern. It has moved very sharply in the last couple of months from the lows of around 2,500 levels. Now, my next view, next target would be 3,700, which is the previous swing high, and then 3,865. So I'm bullish on this. However, I do not, suggest to buy fresh at this point of time. If you have a position, hold on to it for a target of 3,700.
Okay, the next one is coming in from Ansh, who's writing us from Australia, asking about Valor Estate. He says that his buying prices at 178 and 1,700 shares is what he's bought. Wants a 6 months view on this particular counter. Soumil, I'll stick with you for this one. Do you think he should continue holding what he's holding, or should he add more at the current levels?
You're talking about Valor Estate, right?
Correct. And he's sitting on a loss of over lakh rupees now.
Okay. So this one, it is still in the downtrend. So I would not say that it's still given us a reversal. However, it has taken support around 82 levels, which is very crucial. And I think those levels are very important for the stock from going forward. Now, if you already have a position, then I think you can keep a stop loss around 96, which is the previous swing low, and you can hold on to the position because in the very short term, I can see the positive momentum for the stock, and my targets would be around 135, 136 level, which is the previous swing high. So short term positive, but we haven't got a reversal pattern on the medium term outlook. So short term positive for target of 135.
Got that view. But the next question coming in now, it's an interesting one, Samir, coming towards you from on Siemens. Now, Balasubramaniam from Bengaluru actually holds shares at 3965. He bought it in August 2024, and he has been in a loss for a little while now. So his question largely is, should he add more at the current levels, or is it advisable to dispose of and move out to some other counter? What would be your view?
So, if he's bought it in 2024, 39 something, whatever, it was probably pre the split of Siemens and Siemens Energy. So he probably is sitting on a lot of profit because Siemens Energy is also trading at about close to 2,800 rupees. So if you add up the value of the two, because you got a 1:1, he's sitting on a huge profit, right? Unless he's adjusted that price and given that to us, then then it's a different story. But Siemens as a business model, I've been saying for a while that we've been very, very positive. The kind of orders that they're getting from the railway industry has also been extremely strong. The execution of that is going to start happening. The electronics division is continuing to do well. The opportunity is very good. Yes, the stock, if you add the combined values, is down from about 8,200 to about, I think it will come to about 6,200. So it is down. But again, the correction was a change in valuation multiples. And even after that correction, the valuation multiple still remains a little bit on the elevated side. But because Siemens promoter owns 75%, and there are a lot of shareholders who refuse to hand over the stock to anybody else, they want to hold on. The free float is kind of limited, and the stock keeps trading at these high valuations. So given what I'm trying to say is that if you're holding it from those levels, hold on because you're making good money. I think the stock has room to move to 4,000 in the next 1 year. So you're talking of about 10% more from here.
Okay, all right. So that's the view coming in on Siemens, but Waaree Renewable remains in focus on the back of its Q4 numbers and strong uptick coming in on the counter as well. 12%, almost at its day's high point as we speak. Top line growth of 131%. Margins, however, did see a drop coming in, but EBITDA overall. The margins saw a drop in the last 3 quarters, but this time the EBITDA margins have improved by around 10 basis points. Overall, net profit has also seen an uptick of around 66% right now. The unexecuted order book stands at around 2.83 gigawatt, and the wins span largely in terms of utility scale solar projects across multiple states and provides it a multi-year revenue visibility as well. Plus, in terms of energy transition opportunity, also India is targeting a 280 gigawatt solar capacity by 2030, and this is one of the counter that benefits the most out of it. In fact, we spoke to my colleague Varsha spoke to the management as well when it comes to the Q4 numbers. Varsha spoke to Manmohan Sharma, the Chief Financial Officer, to understand as to what's the outlook for the company going forward. Listen to that conversation.
We are here joined by Mr. Manmohan Sharma, who is Chief Financial Officer at the company. Well, Mr. Sharma, welcome at NDTV Profit. Always pleasure to have you, and congratulations on a very strong set of numbers. Now, considering FY26, you have doubled your revenue, more than doubled your revenue over FY25. How is growth looking for FY27? Will you be able to, sustain this kind of high growth that you have seen in FY26 over 25?
So if you see, thank you so much for having me on show. First of all, if you have seen from the past years or maybe quarters that we have doubled our revenue, and the EBITDA is also gone up significantly, improved. The margins from the last financial year to this financial, we are able to keep the intact same kind of margin. So to answer your question for the future also, if they looking at the past trend and the capability of our company to scale up our operation, not from megawatt to gigawatt scale of operation, we are able to achieve this kind of revenue and able to attain this kind of margins. Going forward also, we are very hopeful that we will continue to get orders in all geography, maybe other international location also. We are actively looking to participate any kind of opportunity in the international market also. And domestically, we are actively participating in bilateral discussion with the customer along with this tender business, whatever tenders live coming out there. That also we are looking very actively so that we are hopeful that we should be doing good going forward as well.
Okay, and sir, if you could, give us a ballpark range, if possible, when it comes to financial numbers. I would say a revenue growth in FY27. If you could help us with that.
So we are not giving any kind of guidance that you are aware of. So definitely, but looking at the unexecuted order book as of now, which we carry as of 31st March 26, and that is likely to be executed over the next few quarters or maybe coming years. Along with that, we are hopeful to get orders also in the coming quarter. So that also will go into execution during the financial year.
Right. Got that view. Understood. Sir, considering your order book, what is the target, or how is the order pipeline or order bidding is looking like? By FY27, by end of FY27, what is the target of order book that you are expecting? I just wanted to understand the order pipeline.
So as of now, we are following around 36 gigawatt of order pipeline. So that includes around 12 gigawatt from the international market as well. So for the domestically, if I bifurcate, we are actively looking for the tender business as well as bilateral contracts. So all these put together, we are actively pursuing all kind of order book which we can book during the current financial year. And if you see that entire country, if you see the country has gone up, installed 274 gigawatt of renewable energy. Out of that, 150 plus is coming from the solar only. This year we have doubled our, from the 24 gigawatt, we have done 44 gigawatt almost. So we are out of that kitty we should be getting and this good amount of revenue in the next coming quarter or maybe years.
Well, that was the management of Waaree Renewable talking about the order bidding pipeline amongst other key factors. Stocks zooming up in trade today, up 11.7%. Actually, we also had a question on that because one of our viewers had bought it at 1,000 rupees per share and wanted to hold for a very short term though. But Saumil, let me come to you on the charts. Is there a momentum sustained from these levels as well? What would you recommend?
Just give me a second.
Yeah. This is Abhishek, who's bought roughly 100 shares here, bought at 1,000. Yeah, Saumil, go ahead.
So this stock has very less data points. However, in the very short term, very sharp run up. There's no doubt about it. The momentum is very strong, but I would not suggest to buy fresh. The next target for this stock is around 1,300. I think it is achievable, but no fresh buying at this point of time because I'll be expecting it to cool off a little bit, take a pause and then again start a new move up. But in the very short term, 1,300 would be my final target and it is achievable.
Okay. All right. It's time to look at the F&O space and we have Sharad joining by to give us a perspective on how Qs are shaping up. Sharad, over to you.
Well, largely we are seeing a little bit of consolidation is at play, and of course it's advisable to have a lighter positions as we go into the weekend, but net there is a good strength coming, especially in the consumption names, tobacco related stocks. Mahima had pointed out earlier, even HUL, Maruti and Adani group of stocks are doing well in the trade. No major deep gashes, to be honest, coming in except for HCL Tech and Titan. These stocks are also down by just 1%, but you expect most of the large caps to be in a range bound manner in the day's trade today, as we are waiting important announcement, especially on the ceasefire front. Looking at the BankX also, this is the structure coming in, but long build up definitely there in certain rail stocks. RVNL and Colgate makes it to the list. The stock is up 7%, so we will be getting you more research on that. And short covering is definitely there for United Spirits and Angel One. The capital market theme, select buying is still continuing, and there's a good strength in the technical charts as well. Let's pull out long unwinding candidates. Nothing much to talk about here, and no major trade can be made also out of this. And lastly, I'd like to point out the key short build up which is happening. It's definitely happening on Wipro and HDFC Life on back of largely on the earnings impact. So yes, earnings impact is something which we go into, and remember, larger banks are also coming out with their earnings, so they will be volatile, especially in this Saturday. These numbers are coming out.
Got that view. Thanks so much for that, Sharad. But let me go across, take the next query on Hindustan Zinc. Our viewer has bought it at 663 odd rupees. Now, Samir, the metal pack actually got revived, right? Post what we've seen of the Israel-Iran war. What's your view on this whole pack, and do you feel that Hindustan Zinc is one of those names that could see that momentum continue for the next 1 to 2 years?
So 1 to 2 years momentum, probably not. I think it'll end sooner rather than later. Whenever we see a situation, I've been saying this for some time now, on commodities, that whenever we see a cycle like this happening where prices shoot up in such a reason because of supply side shocks, once the supply starts resuming, then commodity prices come off very quickly. And then what happens is companies like Hindustan Zinc, who are fully vertically integrated all the way from the mining to the finished product, when the prices come off, they stand to be the biggest losers. Similarly, they are the biggest gainers on the way up. Secondly, silver prices have run up a lot, and Hindustan Zinc, actually, I was going through their annual report, and they do a bit of hedging on silver. So some of the silver probably has been hedged at lower levels, so they're not going to get the full benefit of all this upside that has happened. So, they might have some mark-to-mark losses on the F&O side, not on the commodity side, from the simple reason that they've hedged their position. So those two reasons make me believe that, the profit expected to rise is not going to be as good. And given where the valuations stand, I think at this point of time, I would avoid the stock.
Okay, all right. So that's the view coming in on Hindustan Zinc. We've got Vikram calling us from Noida. Vikram, a very good morning to you. What's your query about?
Hi team. So I bought RPSG Venture at a price of 1140.
Okay.
So what is 1 month, 2 month, and 3 month view on this?
Okay, Vikram, got your question. I'll take this up with Somil. Somil, this counter has seen an uptick of almost 60% in the last 1 month. This is on the back of the news flow coming in when RCB got valued at around 33 times, and on the back of that, the Lucknow Giants that they own was valued at around 18,000 crore, right? On the back of that, we've seen a significant amount of momentum in this counter. But do you think that the momentum is here to stay? Because since the past 2 or 3 odd days, the stock has not been doing much.
Apologies. What was the counter name?
RPSG Ventures. It's a small company though, but he's bought at probably the highest levels, and right now it's trading at around 969. 1140 is his buying price.
It has given us a very good momentum, breaking above some very crucial levels, trading above long-term and short-term averages, which is great. Right now it is consolidating. I think it requires a little cool off because it moved from 550 to 1080, which is a great move within a couple of months. Now this cool off period probably takes some time, probably a couple of months, taking support around probably 850, 800 levels, where 200 daily moving averages. So I think buy on decline should be the strategy at this point of time. I'm not expecting this to shoot up from here itself, so I'll be expecting a little bit of a correction, and then again move on the upside should start.
Got the view, Somil. So Vikram's not happy with the stock, Somil's not happy with the stock, nor are the team owners, nor is Rishabh Pant. It's been a weak outlook for LSG, at least at this point of time, both stock-wise and team-wise. But let's go across and start the first round of the rapid fire in this edition of Fast Profits. Samir as well as Somil, you know the drill. The first question coming in on MRPL. Sushila has bought it at 179. Somil, any view on the stock now?
MRPL hold. My view is positive.
Okay, the next one is on Engineers India. This is from Ashok, who's writing us from Andhra Pradesh. Continue to hold or book my profits. He's got 1,000 shares at the levels of 200. Short-term perspective, Somil? Engineers India is the counter. The stock is up 6% as we speak today. Any view, Somil?
Just give me a second.
Sure.
Okay, yeah, positive, and my view is positive. Hold on to it.
Keystone Realtors, Rustamji, Samir bought by a viewer, Mr. Rao. He wants to know if he should add more. He's bought it at 480. Is it a good time to average?
Yeah, I think he can average some more. Long-term prospects are good, sales are good, cash flow will come.
Canara Bank is the other one. Arvind from Mumbai has bought 2,000 shares at the levels of 161. By the end of 2026, can I continue to hold? And from a long-term perspective, can the stock go to almost 460 by FY28 is what he's saying. Samir, any view on Canara Bank?
Positive on the counter. 460, no.
Pro Solutions, Samir, do you track this counter? Any view here for Gopika for the next couple of years?
Sorry, this one I don't track.
Any view on the charts here, Saumil?
I would hold on to this stock. View would be positive.
Okay, Jyoti Labs is the other one. Vijay Kirti from Chennai is holding 50 shares at the levels of 352. Wants to know whether she can average, hold or book losses right now. Saumil, what would you recommend on the charts?
Jyoti Labs, hold on to it. View would be positive. My targets would be around 280 levels.
Cartrade Trek bought by Bharat at 1750. Samir, should he continue to hold this counter, add more?
So at the moment, it's a hold at this price. I think long term is good, but over the next 1 year, I'm not expecting any major upset.
Okay, Oracle bought at the levels of 6645. From long-term perspective, can I accumulate more at this price? Samir, any view?
No, don't accumulate at this price. Valuation is too high.
Yeah.
Gujarat Gas bought at 555 by a viewer Bhaskar. Saumil, should he still continue to hold this counter?
See, in the short term, yes. In the medium term, I'm not looking for, a reversal here. So short term, yes. Probably the targets would be around 400.
Okay, Gillette India is the next one. Our viewer V Murli from Bengaluru is holding 50 shares at the levels of 7734. Can he continue to hold or move to other counters? Saumil, your view on the charts?
View positive, hold on.
HEG bought by a viewer at 631. This is Sunil from Pune. A view here, Saumil.
You're talking about HEG, right?
Yes.
Yes, positive, absolutely positive in the medium term, long term, both.
Got it. Well, Samir also approves this particular stock, but that's the end of the first round of the rapid fire. Saumil, thanks so much for joining in, giving us your views over the last half an hour or so. Samir, stay with us. Lot more stock related queries on the other side after this very short break.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, and if you haven't already, do start sending in your queries to us on WhatsApp. You can also call us, speak to us, as well as our guests directly as well on the number flashing on the top of your screen. We still have Samir with us on the fundamentals. Then we welcome in Rajesh Bhosle, equity, technical and derivative analyst at Angel One. Rajesh, good morning. Welcome to the show. Let me pose the first question to you. This is from Rajesh Maheshwari from Indore, who is a regular viewer. He wants a view on Allied Blenders. He's holding roughly 400 shares bought at 519. What's the view on the stock now, Rajesh? Should he continue to hold or exit at this juncture and book the profit?
Yeah, well, good morning. And if we see the chart structure of Allied Blenders, I mean, in the last 1 month, the stock has already rallied from the levels of 400 to 570, and the chart structure remains positive. We are seeing a saucer pattern breakout on the daily chart. Possibly the stock can head back towards 650 to 680 levels. So hold on to it. Fresh breakout is there. 540 to 550 seems to be a strong support, and the prices can move towards 640 to 670 levels.
Got the view, Rajesh. The next question coming in on Hindustan Aeronautics, 189 shares bought at 4082 by Vijay from Dubai. And he wants a long-term outlook now, Samir. We saw that news flow yesterday, 414 engines also being looked at now after the MOU signed back a couple of years ago. What's your view on HAL now? Is it because it has seen some run-up from the lows, but a view on the stock for someone who's already holding it?
So for the one who's already holding and he's bought it at a half decent price of 4,000, right? I'm not saying it's a very good price. Ideally, I would have liked to say 3,200 or is the fair price to buy the stock if you want to make decent returns. But look, the long term continues to remain positive. It's just that we feel that this stock is going to go into a consolidation for an even longer period. You've already seen, I think, maybe a 2-year consolidation after the stock made a high of 5,500 about 2 years ago. We think that is going to probably extend for a longer period of time. You're going to see another year where the stock is going to be very range bound. But if you have a 3-year horizon, yes, you will get upside, but expect muted returns of anywhere between 10 to 12% because of your purchase price of 4,000.
Okay, all right. So that's the view coming in on HAL. I think we have one more question coming in on defense counter. Mohan is calling us from Bengaluru, who I think has a question on Tech. Mohan, what's your query about?
I just bought 10 shares of MTAR at the rate of 1,600. I just want to know whether can I add the shares for long-term horizon?
Okay, got it, Mohan. I'll stick with Samir for this one as well. Samir, yesterday also we spoke to the management and kind of wanted to figure out as to how this entire Bloom Oracle partnership benefits the company as well. What's your view from a long-term perspective for this one? Because it's going to definitely boost its order book going forward and revenue visibility as well. But working capital is going to be an issue in the short term.
Yeah, Mahima, this is unfortunately one of the stocks that we've also missed out on. It's done fantastically well. It's just that we don't have active coverage, and I don't want to comment because I haven't even seen what it's trading at on value multiples or what the growth factors are.
Okay, then Rajesh, I'll come to you on this one. Any view on the charts for Tech?
Yeah, overall, the chart structure remains positive. We have already seen a sharp rally, but overall, high top, high bottom structure is there. Possibly the reciprocal targets could be around 5,400 to 5,500 level. So hold on to it. On the downside, if we see somewhere around 4,500, there is a strong support for the entire.
Godfrey Phillips is the other counter. Rajesh, sticking with you on this one because G1 actually has a stock query, a short-term outlook on this counter. Now, it's been a very, very active stock, Rajesh, this week across the F&O setup. Any view on the stock now?
So on the short term, if we see after a long time, prices are breaking above the 89 EMA, and also we are seeing a fresh range breakout. So in the near term, further upside can be expected. The recent swing high of around 2,600 can be tested. So there is a base formation, so hold on to it. On the downside, if we see 1980 to 1970 seems to be a strong support. So hold on to it. Chart structure looks positive.
Got the view, Rajesh. But another caller now from Gurugram, and Manav has a stock query for us. Manav, good morning. Welcome to the show. What's your query?
Hi, good morning to everyone. So today I have a query on Amara Raja. So I've been holding on to these odd 15 shares at an average price of 1125 for more than a year or so, like 14-15 months. So the stock was down for quite some time, but for the past 7-8 odd sessions, the stock has moved from 720 odd levels to to the current price of around 780. So I would like to get the expert's view. Like, should I, get look out for this opportunity to, to get out of this stock, or should I hold on to it?
Got it, Manav. Let me go across to Rajesh then, because, fair point that you've been holding it on for some more time and want to get out now. On Amara Raja, Rajesh, what's your view on the stock now? Maybe in the near term and a little more longer time frame, is there a chance of Manav's stock price coming back?
So for now, I would suggest him to hold on to it because what we are seeing, it's based on a strong support. Similarly, during the 2024 March month, there was a rally from this level. From there, prices moved all the way towards the 1600 levels with strong volumes. Prices are now retesting those levels, and some reversal definitely is there. So not much outperformance, but definitely some bounce back is expected in the near term, possibly towards 950 to 980 level. So hold on to it. When it comes around 950 to 980, we need to recheck charts around those levels.
All right, so that's you coming in on Amara Raja. The next one is on BHEL, and this is from a short-term perspective. Our viewer is holding 1,000 shares, bought at the levels of 293. Exit or hold, Rajesh?
Hold on to it. Already strong performance in the last couple of weeks. But what we are saying is it's trading at the calendar year high, and a fresh range breakout is there. So expecting a further outperformance possibly towards 330 to 340 levels. So hold on to it, one of the outperforming counters.
Okay. Sandeep is calling us from Bengaluru. Sandeep, a very good morning to you. What's your query about?
Hi, Mahima. Hi, Puneet. Good morning. Thanks for everything you do, helping us to invest stocks. Just a very quick question. I have bought 2,200 shares of Indian Bank just a couple days back.
Okay.
So I want to understand a 3-month time frame view.
Okay, got it. Sandeep, thank you so much for your kind words. I'll take this up with Rajesh then. Rajesh, your view on Indian Bank for the next 3 months?
So we are very, very bullish on the PSU banks and especially on the Indian Bank. The stock prices are in a consolidation mode, but somewhere around 870, 880, we see a strong base. On the higher side, first immediate resistance is around 1,000 levels. When that is crossed, we can expect a move towards 1,300 to 1,350 levels. So as of now, the stock is consolidating with a positive bias. So hold on to it with a medium-term kind of view.
The view, Rajesh. But the next question coming in from Jeet from Kolkata. Now his question is on Dixon Tech. Is it a right time to enter now, Samir? There are two key aspects for this counter now, right? One has been the recent news on PLI 2.0 that might come in, and could be a big benefit for Dixon, especially in the mobile phone schemes. But the Vivo JV hasn't yet come in terms of approval, and that will take roughly 45 to 60 days according to management. So you already lost a quarter for that. How are you viewing this counter on both these aspects now? I know you like the stock, but both these two new news flows, how should one look at it now?
So the delay obviously hurts, right? The sooner it gets going and you get the sales coming through, the operating leverages play out. Unfortunately, we won't get that as quickly. But having said that, now let's assume it takes 60 days to come, and we factor in something from a 2-year perspective. Once all of this productivity starts picking up and the pickup of manufacturing and starts happening, then what you will see is the profit starting to grow. The company's valuation has corrected from over 55, 60 times earnings to now 35 times earnings. Now, this is a company, of course, the growth historically has been fantastic, about 100%, which obviously won't get replicated. The growth numbers will come down because the base has become bigger. But even if this company can post a CAGR growth on top line of about 50% and, operating leverages play out, the profitability can grow by at least 60, 65% year on year for the next 2 years. And if we factor in FY28, then the stock is trading at about 25 times. So a company with good ROEs, good growth, trading at these valuations is good. So from that perspective, even though these two news flows have come, it's not, the PLI's benefit, the delay doesn't hurt me. It hurts in the short term, not in the long term. So I would still go ahead and buy.
Okay, all right. So that's the view coming in on Dixon Tech. I think we've got Ram who's calling us from Hyderabad. Ram, a very good morning to you. What's your query about?
Hi, good morning, everyone. It's been a while I went out from market. So I do have a query on the HDFC Bank. I wanted to put the money for 10 lakhs into the HDFC Bank. So is it the right level to buy? Is what review how much will be there? It is consolidated from past 5 years.
Okay, Ram, so a couple of questions for you then. What percentage of your portfolio is this 10 lakh rupees, because it's a huge amount, and do you hold exposure in other private banks, and what is the time horizon that you're looking at?
No, I don't have any financial sector in my portfolio. I have heavily invested in the motor sector.
Okay.
So this is the first bank I wanted to add into my portfolio. It is a 10% of my portfolio value.
Fair, and this is from a long-term perspective, I believe.
Yeah, long-term perspective.
Got it. Okay. Then I think Samir will be the right person to answer this. Samir, do you think it makes sense to invest 10 lakh rupees in HDFC Bank right now?
So I'll break it in two parts. Yes, it makes sense to invest in HDFC Bank. Absolutely. Please go ahead and invest. My only suggestion, since he's saying he has no other banking stock, why don't you put 7.5 lakhs maybe in an HDFC and put 2.5 lakhs in something like an IndusInd Bank? I'll tell you simply why. IndusInd Bank valuations are at the lowest. This is a bank which has great reach because of the branches they've set up in the past. They've gone through all the NPA problems. And what you're going to start seeing is the uptick in the growth numbers coming in after the new management has taken over, plus a valuation re-rating. So you could probably split up 75% into HDFC, where it's very safe and very stable, and 25% where you can get a little bit of alpha without taking too much risk, because there's always an issue if buying a bank which is not the top, but the returns can definitely be better. And at this point, the risk reward looks in favor of IndusInd. So break it up 75%, 25%.
Also, just like, and fair point, Samir, definitely on HDFC Bank. Just wait a day, Ram. The results are tomorrow. Could be a very interesting quarter for the bank, given what has happened in this quarter. It's been an entertaining one, to say the least, for us. But continue to monitor based on what developments have happened. The next question coming in on Kim's. Rajesh, our viewer, is holding 50 shares at 688. Should he exit now or continue to hold this counter?
So hold on to it. Very positive chart structure. In fact, we are seeing a bullish 20 and 50 EMA crossover, bullish crossover. So with that, we expect further extension of up move. Possibly 800 to 820 can be expected. So hold on to it. On the downside, we see strong base formation at around 700 level. So hold on to it. This is for CMS cams.
Okay. Sorry, I think we were talking about KIMS, right?
Yeah.
Not CAMS. Rajesh, KIMS Hospital is the counter that we're talking about.
So KIMS, hold on to it. Higher bottom is definitely there at 625. As of now, it has a resistance at around 200 DMA, that is 690 levels. Once 690 is crossed, we can expect a move towards 745 to 750 levels. Hold on to it. 625, 630 seems to be a strong base.
Okay, all right. The next one is coming in on Poonawalla FinCorp. Our viewer Sandeep from Delhi has purchased 300 shares bought at the levels of 414. Shall I accumulate more or continue to hold? Samir, your view on this one, especially after the QIP announcement. The expectation of the street was of a higher number in terms of the fundraise that they were going to do. But, I mean, the stock did not react much to that as well. But your view?
Yeah, so hold on to it. Look, growth is great. It's probably above industry average. Valuations also are trading rich. So from that perspective, the upside may not be as great. The fundraise obviously helps them on their capital adequacy, which also allows them to leverage their book a little more and grow a little faster. So in every aspect, that way it's good. But again, valuations a little rich. So maybe temper your expectations to maybe about 500 max in a year and a half.
Got that view, Sami. The next question coming in on Nava Limited. We actually got a couple of queries on this counter. So Manisha from Bangalore holds shares at roughly around 496. Stocks up 10% today as we speak. Asking if she should book her profits or continue to add also at this point of time. What would be your view, Rajesh, on this counter? Kishan actually holds at 293, so much low value. But your view on Nava Limited?
So I wouldn't suggest to add more because it's approaching its all-time high, but definitely strong positive momentum is there. a strong signal by indicators. So expecting a move towards 770 to 800 levels. So strong positive momentum is there, but fresh long should be avoided.
Okay, all right. So that's the view on Nava Limited. The next one is coming in on Raymond Limited as well as Raymond Realty. Shashwat is holding 37 shares of Raymond Limited as well as I think Raymond Realty. He wants to know whether he can continue to hold this from a long-term perspective or not. So he's probably gotten this as a part of stock split, the Raymond Realty part. Samir, any view on these counters?
So Raymond Realty we haven't covered, but Raymond Industry, I think one can continue to hold. We believe the consumers' discretionary spend is going to see an uptake. They're expanding their reach. They have a fantastic brand value, which they can leverage on. So for me, Raymond Limited, continue to add. Raymond Realty, no view.
Got that view, Samir. The next question, coming in now, it's on Aditya Birla Lifestyle Brands as well. Now, our viewer Sharath from Tirupati actually holds this counter. He's holding 84 shares at 149. What's your view, Samir, if you track this counter right now?
So again, same business, consumerism. We believe the push is going to come. They have some good in-house brands. They've licensed in some good brands from international markets. As the consumerism starts picking up, what you will see is the operating leverages play out. Again, this is a very high operating leverage because a lot of the costs are fixed costs which are running through the system, right? As you set up your new branches, your new reach, all of that cost, the rent, the electricity, the raw materials, everything is fixed. Once the sales start picking up, then the operating leverages play out. This is the same story for Trend, same story for many of these other companies in the retail space, Metro, Bata, etc., etc. So we believe once consumerism picks up, it's not going to happen now. It's going to take another 6 months at least. But that is when the story will start unfolding. So hold on to it.
Okay. On a lighter note, if they change the name and move to AI businesses when these stocks start to pick up, just for reference,
it was 30% yesterday.
So it has. Okay, that was but just for viewers' reference, I was talking about Allbirds, which is now New Birds AI. But moving on to our next caller, Arvind is calling us from Bareilly. Arvind, a very good morning to you. What's your query about?
Good morning, ma'am. Ma'am, मेरा query है एक company है सिंगार हाउसिंग ऑफ मंगलसूत्र लिमिटेड.
ठीक है.
इसका 202 पे अभी शेयर चल रहा है. मेरे को इसका है ना लॉन्ग टर्म के लिए मैं परचेज करने का सोच रहा हूँ.
ठीक है.
तो उसका 3 साल के लिए हरिजन जाना चाहता हूँ कंपनी का क्या है क्या नहीं है. और एक रिक्वेस्ट भी मेरी कि कभी अगर नो योर कंपनी पे कंपनी का अगर आप वीडियो बना पाए आप लोग कभी.
पक्का अरविंद, आई एम मेकिंग अ नोट ऑफ दैट. पक्का हम ट्राई करेंगे कि इस कंपनी को हम KYC पे ला सके. इनफैक्ट हम सोच भी रहे थे क्योंकि ये कंपनी अभी रिसेंटली अभी तक मंगलसूत्र ही बना रही थी और B2B B2C कर रही थी, बट अब गोइंग फॉरवर्ड ब्राइडल ज्वेलरी में भी जा रही है. तो हाई मार्जिन बिजनेस है उनके लिए. एंड योर क्वेरी इज वैलिड एज वेल. तो समीर, आई नो इट्स अ वेरी स्मॉल कंपनी, 1900 करोड़ का मार्केट कैप है. बाय एनी चांस एनी व्यू?
Sorry.
No worries. I completely understand. Rajesh, enough data on the charts to give a perspective Arvind को कि अभी खरीदना चाहिए इस levels पे from a slightly long term perspective?
तो यहाँ पे अगर मैं देख रहा हूँ कि 180, 170 के आसपास जो है एक डबल बॉटम फॉर्मेशन दिखाई दे रहा है और एक पॉजिटिव डाइवर्जेंस भी है. तो शॉर्ट टर्म की नजर से एक पॉजिटिव बायस बन रहा है और वापस 240, 250 लेवल्स देखने को मिल सकता है. बट काफी शॉर्ट टर्म व्यू है क्योंकि डेटा भी ज्यादा नहीं है. तो शॉर्ट टर्म के नजरिए से डेफिनेटली 235, 240 के लिए प्ले कर सकते हैं.
Got that view, Rajesh. The next question coming in on HDB Financial, and Shiv Kumar actually holds 107 shares at the IPO price, and I do believe the IPO price was roughly around 740 if I'm not wrong. I don't think I am, but it's around 740 on the IPO price. Now, Samir, we saw stellar results yesterday being announced by the company a couple of days ago. Saw strong reaction to stock yesterday as well. Any view? If you cover this counter now, what should he do with HDB now? Should he average down because his price 740, stock's trading at 680 now?
Yes, absolutely. Average down. I think, the finance space is somewhere where we've been very positive. If you look at the numbers, you'll see that the gross NPA numbers are coming off, which is a cause of concern whenever gross NPAs rise, because that means your credit cost increase, and that is starting to make its way down. So you're seeing the profit growth. Secondly, you saw the NIM expansion, which is also fantastic, given the kind of competitive intensity that exists in the market and interest rates coming off in the recent past. So from both angles, we think HDB is looking good. Right now the entire HDFC pack has kind of gone a little bit out of favor with investors because of the corporate governance talks in the market. But once everyone sees that there's no issue with the corporate governance, I think all of them will move back up on valuation. Confidence will come back, and HDB is trading at a reasonable value. I remember deals of this, you said 740 was the IPO price. I remember deals in this happened at 1040 and the pre-IPO in the off market. So if people were so bullish back then, I'm sure that valuation multiples, once they return and the growth numbers start showing, stock will move up.
Okay, all right. So that's the view coming on HDB Financial. The next one is coming in from Prashant, who's writing us from Bengaluru, asking about CG Power. He wants to know if it's a good time to enter into this counter from a 1 to 2 year horizon, and what should be the entry price? Samir, this question is directed to you. Any view on CG Power?
So yeah, it is a good counter to enter, but only the pricing is not. I would wait closer to 650. Now the question is, will we get 650? I think if you go back a little into history, the price had come in the recent past. So I think you will get an opportunity there again, and that's when you should get.
Okay, all right. It's time for our rapid fire round now. Samir as well as Rajesh, try to keep your answers as short as possible. The first one is coming in on HCL Tech. Sudhir wants to know whether he can accumulate this counter for the next 2 years. He's already holding 55 shares, bought at the levels of 1375. Samir, your view?
Just a hold.
Is it a good time to enter Minda Corp, Samir, for the next 1 to 2 years is what Rajesh is asking.
Minda Corp, we don't have coverage for this one.
Okay, the next one is on Clean Science, and this is from Krishna, who's writing us from Hyderabad. Wants to know whether to hold or sell. He's sitting on a 58% loss right now. Samir, any view?
Absolutely, I would actually advise him to buy, not sell. Chemical sector at the bottom, it'll turn. Hold on and buy.
Mutyam holds Bharat Dynamics at 1420. He's holding 100 shares here. Samir, what should he do with this counter now?
Just hold at the moment. I wouldn't recommend adding.
Okay, Cyient Limited bought at the levels of 1870, sitting on a 6K loss. Average right now. Rajesh, your view on the charts?
Average around 900 levels, expecting move towards 1200.
Okay.
Ecos Mobility, Rajesh, a small counter, but Tony Pereira wants to know if it's a good time to enter. Would you recommend that?
Not tracking this counter.
Okay, Voltamp is the other one. Satyan from Kerala is bought at the levels of 7,000 rupees. From a long-term perspective, can you continue to hold? Any view on this, Samir?
Absolutely, hold on to it. Like I said, power space is doing well. Hold on, this will also be.
Suresh has bought into SW Solar, and it's about time we get this question at 200 rupees per share. He's asking Samir if he should add more at this counter. He's holding 200. He's holding 300 shares at 200 rupees.
Yeah, please go ahead and add. I have a strong buy on this counter. He saw the Vari Renewable Technologies results. This SW Solar is 4 times this size.
Yeah.
You get technical.
Okay, the next one is on Yes Bank. From a short-term perspective, is this a good hold? Our view, Ram is bought at the levels of 21 rupees. Rajesh, your view?
Yeah, expecting a bounce back toward 21 to 22 levels, so hold on to it.
Raghu holds Maruti at 14,700 odd rupees, so he's currently sitting on a loss. What should he do, Samir, with this counter now?
Well, if he has a 3-year perspective, hold on. If it comes closer to 11,000, add on to average it. From 14,000, your returns are going to be very muted over a 2-year period, maybe 8 to 10% max.
Okay, Bharti Airtel bought at the levels of 1898. Our viewer wants to know whether they can continue to hold this from a long-term perspective. Samir, your view?
Yeah, hold on.
AK Balla holds Canterbury at 254. Any view here? Rajesh, he's holding 2,500 shares. Stocks largely
hold
flat
on to
today.
Rajesh, hold on to it, expecting a move toward 270 to 80 levels.
Okay, Colgate is the other one. Rajesh, our viewer is holding 200 shares at the levels of 3409. Your view on the charts, whether to continue to hold?
Yeah, FMCG space is looking good. We are expecting move towards 2200.
Nazara Tech, Shivani wants to enter this counter right now. Samir, given the volatility, would you recommend that?
So volatility in the counter is not the problem. The problem is the loss in real money gaming, right? Which is good. and that is not going to come back. So the growth is now going to have to come from other gaming systems, which is not going to be as remunerative. So for me, at the moment, it's at best a hold, but if you hold, I mean, I wouldn't buy it.
Okay, Suzlon, Shankar from Bangalore is asking whether you can go ahead and buy 500 shares at the current market price. Rajesh, you'll be on the charts.
So yeah, definitely hold on to it. A strong reversal is there. Possibly in the near term, 60-65 can be expected.
The last question for today, Cohan's Life bought at 670. Samir, we started to see some more on that counter now. But should he average now? Stock's trading at still 365.
Yeah, 100% he should average. Look, the management very clearly in the last phone call said that they faced a little bit of issues when it came to the CDMO business, and they don't want to have Q4 as well. Now that Q4 numbers come and then they give once they start showing that this problem is past, I think the stock will relate itself and move up. So this is the time to average.
Got it. Well, that was the last question, and that's all the time we have on this edition of Ask Profit. Samir as well as Rajesh, thanks so much for helping us solve the 56 queries that we have been over the last 1 hour. But a lot more stock-related queries remaining. We'll start taking them at 2 p.m. today and Ask Profit the afternoon edition. So do stay tuned for that. But thanks so much for watching. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest KYC companies, and also if there is any story or alpha to be made, we get you those stocks as well. But before that, I would like to give you the entire picture about a company, and that company, there are some hints. Try to guess this company. Of course, it's a small cap company. It's a Hyderabad based IT company. Let's give you another hint if you can try and guess that. Second hint is the company deals with AI ecosystem. So a lot of companies are there from Hyderabad which are in software, which are in AI. But let's get into more details about it. The company's stock is down 31% in the last 1 year. So there is a little bit of concern for this company. But what's this company all about? Let's talk about that. And the company in focus is Kelton Tech Solutions. Let's get that on the screen to show you this company which we'll be getting in our KYC show. And also there are some questions to be asked where we'll ask the management how things move, but there's a caveat to it. Most of these questions won't revolve around the numbers as such, because there is a silent period for the company. So just an update for you, there's a new AI tie-up the company is having, and what does this mean? Any incremental benefits which can be seen especially in the numbers, that's what we'll be targeting. The second important question for Kelton Tech Solutions is going to be the exact moat and business model of the company. What does this company actually do? What is the AI element to it, the agentic AI which the company claims, and what's the benefit like going ahead? Is there any agility at play, or is it different than the legacy IT businesses? Understanding the billing cycle and the architecture of an AI company, how are they doing that? Have the revenue started accruing? That's one important question to be asked. And also the rating agencies recently have started upgrading the company. That means there is an upgradation at play, especially on the operational and the financial parameters. And generally these are the initial signals where the stocks start doing well. And of course the stock has seen a correction. Another important question for Kelton Tech is definitely going to be the new acquisition plans. Company does have a cash balance, and in case they are looking for acquisitions, which are the areas the main focus should be? So that's what the important question would be. And of course the AI Gigafactory initiative, what it is all about, that's what we'll go deep into it and try to understand. And largely our discussion is going to be on strategy, and Niranjan Chintam, the executive chairman at Kelton Tech, will give us the view forward for the company and the industry as a whole. So that'll be pretty much interesting on the show to have a chat with Mr. Chintam. But let's give you the entire details about the company. Ye company karti kya hai? Let's get into details. What are the overall, parameters where we will be looking at the company, the consulting company as they call it, and they have a global deliverability capability as well. That means you can see the way the GCC expansion is happening. Maybe that can be a benefit given to the company as well. Now they're delivering solutions across cloud, data, AI and enterprise platform. So that's something which we'll be watching out for. Apart from this, looking at the partnerships, this is a very decent partnerships coming in. The larger players are there. This of course includes Microsoft, AWS, SAP and Snowflake, to name a few. So definitely they are having strong partners, especially in the North American markets. 50 plus Fortune 500 plus clients the company is having. And if we get into more details about it, let's see what else is there about the company. Largely we see overall they have an agentic AI platform as well. So that's something which we'll definitely talk about with Mr. Chintam. And what's the growth ahead? Because agentic AI we have been hearing a lot, and how much does it actually fructify? That is important. Recent acquisitions is definitely there, which was announced. Kumori Tech, the company's name. That is where it's an enterprise platform, to put it in a simplified version for you. And the credit rating upgrade was also there, coming in from ICRA for Kelton Tech Solutions. So that itself is an important trigger or a point of inflection, if you can call it. Recently they partnered with Future Agent AI labs as well. So this is important as well. But partnerships are there, but AI will definitely take time, and if that benefits come, then we need to wait it out. But let's see how the revenue by geography split is there. The US still contributes the majority of revenue, almost 82% of that coming in. Minor revenue contribution coming in for India and the European markets, but the focus is on the US market. It's very much important. If you look at the segment also, the digital transformation takes the bulk of the revenue contribution, almost 83% of that coming in. But apart from that, there are other solutions also. This includes enterprise solutions as well. But why the stock is out of favor? Is there any value here? The first is there's a lack of analyst coverage coming in Kelton Tech Solutions, and that is why we come and get you these companies in KYC to understand whether they are investable or not. There's a lack of institutional support. If you look at the FISDI, so concerns are definitely there on the stock. But let's see other reasons why it is out of favor. There's no major financial performance which has come in from the company yet. So we need to see a good up move or a growth coming in, and that is how the market will award a company. At the end of the day, we need to see the earnings growth as well. The rapid transformation is happening in AI. So there is a boon as well as a bane if you are totally into AI, and each time some larger players comes up with any kind of an update, this definitely scares the smaller players, which Kelton Tech is also there. So both sides, it's a sword when it comes to AI. Also, apart from these reasons, apart from these key reasons why the stock is out of favor, is the flows. The flows have also actually come on the lower side. So I have given you the entire picture for Kelton Tech Solution, but let's understand the rating parameters where we judge the company in KYC. This is the traditional format which we follow, and largely we do not change that. Income statement, balance sheet, cash flow, these are the original numbers to look for in the company, and of course we'll get the Q3 numbers. Remember, the Q4 announcements of this company has not been there, and there is a silent period, so the management won't be talking a lot on the numbers and the outlook, but nevertheless we'll try to take out as much as possible. Return ratios is there, and also the street trade shareholding, something which we talk about. Valuations, we'll try to compare it with itself. We haven't got an apple to apple peer, and the outlook for the company and the industry as a whole. So this is how we'll be judging Kelton Tech Solutions overall, giving us totally 8 rating parameters. But apart from that, on the show is also very much important, and the management, if we talk about, we'll speak about that. But the first thing would be the income statement. Over here we see the revenue, EBITDA, these are all single digit 3-year CAGR growth, so there's nothing great about it. I mentioned you why the stock is out of favor for the street. But net, let's see how the Q3 numbers have shaped up. Is there any bigger change? And yes, there seems to be a marginal uptick coming in the majority of the metrics, and of course the margin also going past that 12% mark and coming in at the 13% mark. So net, it's neutral when it comes to the overall setup, and it has come back to its that 12% margin trajectory as well. But that's not enough. The company needs to come with something more superlative performance, because the growth numbers need to be seen. If that happens, then we see the EPS contribution coming in. So net, it's a neutral rating, I would say, when it comes to Kelton Tech Solutions. But let's also point out the balance sheet. What's happening here? Largely balance sheet is stable here. Even if you look at the equity and the book value, and the debt front isn't so much, because the company itself is an IT company. Debt ज़्यादा इनका होता नहीं है, cash balance रहता है, या तो कभी acquisition करते हैं या तो कभी buyback करते हैं. But definitely we'll see what this company does. It's a small cap company. That is why it is something to take everything with a pinch of salt. Just look at the levels which I spoke about, and it's almost stable. So it's a neutral rating when it comes to the overall balance sheet. But apart from income statement and balance sheet, let's also talk about the cash flow, how things are moving, and that's also pretty much important. Overall in the market, how the things move. And remember, there is some sort of, you could say, a little bit of seasonality also at play, and that's what we can see over here. So company needs to show. See, in FY25, the cash flow from operations was on the lower side. PAT has been strong. So there are some signals, but it's still mixed when it comes to the cash flows. So we'll try to understand this structure also in the future about how this structuring happens of the cash flow. But right now it's a neutral rating when it comes to the cash flows. Apart from cash flows, let's talk about the return ratios. And return ratios is strong. FY23, the return ratio is roughly 14%, and that is where we see the growth coming in at 16%. It's actually sustaining in FY26 7 as well. So the ROC numbers and largely the ROE numbers also have shown strength for this. So I'm going to give this a strong thumbs up when it comes to the return ratios. Also, apart from return ratios, let's talk about how the shareholding has moved, and there's a concern coming in. Of course, the shareholding drop has been there, but no participation has come from FIs and DIs, and of course, looking at the market cap also, largely FIs, DIs in the overall midst of uncertainty in the small cap, mid cap have actually shied away, but nevertheless, no participation has come. So net, the shareholders also, you talk about it, retail has gone up, but institutional support is not there. That's a big overhang of the stock, and that's why I've given this a strong thumbs down. Apart from this, let's talk about how the things are moving when it comes to the overall street cred. Street cred means how much percentage of returns have been made, किसका पैसा बना है, अभी तक पैसा लगा नहीं है, बना है. It's been year-to-date basis, stock is down 21%, 6 months, stock is down 35%, and even 1 month basis, you see the stock is down 11%. So definitely concern is there. Over the last 5 years, just 6% of returns has been made. So definitely there is a big concern. If you are an investor, you might be trapped in this counter, and there might be some reasons also why it's out of favor, but we'll try to understand the other side of the story from the management as well. But as of now, street cred, I'm going to give this a strong thumbs down as well. Apart from street cred, we talk about the valuations, and valuations are quite cheap because of a significant correction happening. In the 5-year peak valuation we have taken out is 28 times, and compare that with the current numbers, that's coming in at 9 times. Even the 5-year average numbers, if you look at it, it's at 14 times. So the valuations are dirt cheap. Because of that basis, if you are taking any decision, then it's a strong thumbs up when it comes to the valuations as well. So we have done 7 rating parameters for you, but the last one is very much important, the outlook parameter. Over here, the credit rating upgrade has come in. Maybe that's an initial sign for a reversal of fortunes for this counter. The second outlook which I have taken, that's also very much important. Let's pull out the second outlook as well for Kelton Tech Solutions, where there is a bullishness coming, and especially because the revenue visibility is becoming better and better, and that's what we had read in the rating agency report also. Order flows are also coming in, and the moment that starts coming in, some certainty is given to this counter. The promoter participation via share warrant recently was there, so a little bit of conviction is there in the counter, but we'll wait for something major from the company itself, because announcements are coming a lot in AI, but how fruitful are they? What are the exact numbers? That is why the street is still confused regarding this AI related announcements, and maybe for the stock as well. A company is focusing on agenting AI platforms. That is important as well. But how things move, it's a very, very developing situation. So net, it's a neutral rating for the outlook. But let's understand the total KYC ratings of the company which we have given. What are the numbers looking like? Largely, your income statement, balance sheet are largely neutral. Of course, balance sheet management is strong. Return ratios is good. Anything above 15% for an IT company is something which an investor should look out for. Shareholding, lack of institutional participation, and street cred. The stock has not made money for a short term, medium term, or even the long term investor, and that's a big concern. That's why I've got this company in KYC to see whether any alpha comes. Is the stock making a bottom? And of course, the valuations are very much interesting because of the stock fall. And outlook, it still seems neutral because the AI related announcements is there. But we need to see the growth in earnings. That's the first and foremost important thing, and largely it's 4.5 out of it, largely in line with what our research is. But we'll get in more details as well. And of course, joining in would be the Niranjan Chintam. He's the founder and chairman at Kelton Tech Solutions, and I'd like to give a little bit of snippet about him, and we'll just take a break as well, and we'll give you the entire picture. 30 years of experience coming in, but he has led several Fortune 500 companies and government agencies in US and India as well. And also another angle is that he's an MBA from Wharton School of the University of Pennsylvania as well. But do hold on for a break. After this break, we are going to be speaking to him. He's the founder and chairman of Kelton Tech, so stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन।
Welcome back to KYC, and joining us is Niranjan Chintam, the Executive Chairman at Kelton Tech Solutions. Good afternoon, Mr. Chintam. It's always a pleasure to talk with you, but just give us a total sense about the exact moat and the business model of the company. The street seems to be confused regarding what the company actually does. Is it an IT company? It's a service company? It's an AI-related company? What it is all about?
Sure. Thank you, Sharad, for having me, and thank you for giving me an opportunity to talk about our story. Okay, so we'll talk about Kelton. How is it different from the competition that is out there? Let's start with that and we'll go from there. Kelton has been born digital, right? We were born in 2009. Unlike others where they had legacy, we don't have the legacy. So we have strong engineering depth when it comes to cloud data and the modern platforms. So for us, is right, AI, is something that is another tech for us. Even though it's just latest and greatest and it's all cool, for us it's another tech. It's an emerging tech, and we believe in using these kinds of technology to build platforms and solutions for our customers.
Right. So we understood a little bit about the company, but there has been recent new AI tie-ups which have been there. What does this actually mean for the company? Are these just announcements, or are there any incremental benefits to it?
Okay, so for us, any of these new AI, let's call it LLMs, right? Be it OpenAI or Claude, is just another tool for us to provide a solution to our customers. Talking about the agentic AI, agentic AI is nothing like, it's behaving like an agent and performing certain tasks assigned to it. You typically have a master agent, which we call the orchestrator, that orchestrates everything behind the scenes. And then you can have multiple agents running or specialized agents running the solutions that are required to do a specific task. Once the task is complete, it could call another agent, or it could conclude and say, I provide the solution, give it to the orchestrator, and then the orchestrator decides what next to do it. So all of these put together provides a solution to our customers. So what that requires is, very deep engineering expertise is required, because you need to know when what agent need to be called, and also we need to have a domain expert. So if you don't have the domain expertise, I'll just pick an example of, let's say, travel and hospitality. If what happens once you book a ticket or you want to book a package of let's say you want to have a travel plan or a vacation that you have, what could be a package for a family vacation or a pilgrimage vacation versus, let's say, for instance, somebody wants to go on their honeymoon. So those kinds of things are all orchestrated behind the scenes based on what the question and the answer is provided.
Mr. Chintam, you explained us about the AI front, but the question remains is, how is the billing and the overall architecture looking like for these AI companies? We need to understand the entire cycle, how things plays out. Your views on that?
So the billing cycle, typically is outcome based. So what we have seen is, unlike the traditional model, when it comes to AI-based solution, it is an outcome driven. People have gone away from time and material to an outcome-based one when it comes to some of these AI, led solution offerings. There are still customers of ours who say, okay, hey, we don't need you to provide a solution. Give us, in some cases, an AI engineer that could do certain tasks. So that requires deep expertise, right? It's not like You can just train somebody for a few months and then say, okay, he's an AI expert, but he needs to have all the engineering skills that are required and be able to ask the right questions for these AI tools, be it the, like I said, the ChatGPTs or the Claudes. Ask the right question to get the right answer. In some cases, right, people are to keep talking about, it's not like a traditional normal user where you ask a question, you get a response. In our kind of a question, it's almost like a 3-page question before the answer that we are looking for comes out. Okay, so that requires a lot of expertise.
Right, and Mr. Chintam, apart from this, the question definitely is on the improving credit profile of the company. That has been increasing, and that's a precursor for the good financial health of a company, to just put that perspective. Your views on that?
Sure. So the credit rating increase is primarily driven by two things. One, the cash flow that is coming in. The second is the margin improvement. These two led to credit rating, and also the pipeline that's seen. What is the pipeline that we have? The credit agency looked at that, then looked at what the competitors are looking, and then came back and said, hey, your rating is much better than others, or comparatively, it has gone up. We used to have BBB. Now we went to the A family of thing. So that it becomes easier for us to get credit now or reduce our interest obligations when to come to the banks.
And Mr. Chintam, is there any new acquisition plans as of now? And if yes, any sectors which are looking good, or you'd like to wait it out, seeing the current market conditions?
See, at this point, there is nothing in the pipeline as such. But with that said, right, we're always opportunistic. We believe that we acquire for two reasons. One is either we want to penetrate a certain geographic region and or a certain skill set that we don't have or we have less of, then we go buy a company. Example is the Komori acquisition that we already announced. I can talk about that. Is primarily we acquired it for the ServiceNow space that they are in. To get to that particular level of partnership that Komori has, for us, it would have taken us 18 months to 2 years. Even though we had all the credentials and the certifications, but to get that partnership level, it would have taken that long. So we felt that, ServiceNow is a growing space. We want to be in that space. Some of our customers are asking for that kind of expertise to be provided. We went and bought Komori. Now we have a ready-made certification and partnership level at ServiceNow. Now we can cross-sell and upsell to our existing customers and or the acquired customers of our other solution offerings that we have.
Right. And Mr. Chintam, what is the AI Gigafactory initiative? The company has spoken about this also, but the longer scheme of the things, what benefits we can get from this?
Sure. We partnered with a company based out of Hungary that has been tasked to come up with a European-wide AI Gigafactory. Basically, it's nothing but coming up, just like you're seeing that that Google has come up with a data center solution in Vizag. Similar to that, they want to build an AI kind of a data center there, and they're using us as their implementation partner when it comes to the AI Gigafactory. And that is a work in progress. We have a MOU that we signed with them, and we should start seeing revenue coming in shortly.
Well, we have discussed a lot about the company itself, but I want to take one step back. A 20-year-old who's watching KYC right now wants to start in AI services from India. What can he or she start with?
So today, building let's say a software has become so easy using something like LLMs, Claude code. That's what primarily everybody is using, Claude code. What they should be focusing on, just not building that particular software, but it should be driven to a certain outcome, right? Nowadays, every customer of ours is coming and asking us, what's the outcome? Yeah, building software means nothing. Can it scale? Is it secure? Tomorrow, can I fulfill end-to-end solution? And you're not only looking at end-to-end solution, you also need to talk about what kind of data that you're going to get. How good is the data associated with that? It is as good if you don't have good quality data specific to your particular industry or the solution that you're trying to offer. you will not get, what we call garbage in, garbage out, right? If you need to have the right amount of quality data, curated data that is fit to that. So that is what is required. 20-somethings are much easier to adopt these kinds of new technologies versus, let's say, let's say 20-year experienced person. So all the 20-year-olds, I would urge them to start thinking of solution offerings, and they should be looking at building platforms of the Googles of the world. We need to start coming up with products in India that could scale up. Because remember, building for, let's say, 10 users to 100 users is easy, but how do you scale it up to 1 million users? That is where your skill set comes to. And that is what Kelton has.
Well, thanks a lot, Mr. Chintam, for that. And you've given us interesting views on your company, clarified the business model and the growth outlook ahead, and a very important statement for a 20-year-old starting in the AI services. Thank you very much, Mr. Chintam, for that. And that's the management of Kelton Tech Solutions we're talking about. And they did clarify the business model, their growth outlook, despite not sharing a lot of numbers, because of course it's a silent period. But definitely we have found some value in this company. And for interesting companies like this, keep watching KYC, and I'll get you interesting stories where you can make alpha also. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, Sharper Voices. Every morning on India Market Open, your favorite market show.
Positive global cues drive the Lal Street today with Nifty trading near 24,300 level. Broader markets outperform all sectors barring IT trade in the green. Wipro under pressure after delivering an inline Q4 but a cautious guidance growth for the next quarter. In a big move, the company also readies for buyback worth 15,000 crore rupees, its largest ever. The NSE IPO is gathering momentum. The government is in talks with the top PSU shareholders to participate in the offer for sale ahead of the April 27th proposal deadline, with NSE targeting around 4 to 4.5% stake dilution as the listing process moves steadily ahead. Crude cools as diplomacy takes center stage. Oil prices fall after President Donald Trump struck an upbeat tone on a potential US-Iran ceasefire, even as uncertainty around Hormuz reopening and deal timelines keep the markets on the edge. Initial findings into the Vedanta power plant blast indicate excess fuel buildup inside the boiler, causing a sudden pressure surge and explosion. Officials also point to maintenance and operational lapses. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take you through the market. And it's a happy day on the markets, and it all really is dependent on how the Middle East tension really emerges. So there is a positive global cue that is really aiding our Indian markets, and Nifty 50 closer to the high point of the trading session at the current moment, 24,260 odd levels, and it is up about close to 0.3%, given up a slight bit of profit in the last few minutes of trade. But remember, if we really take a look at the oil prices, Brent crude is hovering lower than $100 per barrel, but also higher than what it has really sustained, closer to $95 to the barrel. So at the moment around 98 odd levels. Taking a look at our own markets, well, the advanced decline ratio really gives the picture where it's 9:3 ratio, and it is sustaining in terms of more advancing stocks by a huge margin. When we really take a look at the overall picture in the market, 0.3% odd up on the benchmark indices, and it's also the banking index which is trading in line with the key indices today. But on the other hand, remember, it's the broader markets that is the mid-cap universe which is gaining momentum much more. So there is a lot of buying that is seen on the mid-cap companies and the small-cap universe. So the smaller companies which had lost a lot of ground are really catching momentum and seeing a lot of interest really coming in. Taking a look at what are the heavyweights which are really performing well for the Indian markets on Nifty 50, well, big boy Reliance Industries is the top gainer, adding about 35 odd points to Nifty 50 at the current moment. Remember that out of 82 odd points that are really gained by Nifty 50, 35 points coming in from Reliance Industries, HDFC Bank giving another 25 odd points, and the other from the consumption space, HUL as well as ITC. So these four counters and heavyweights itself are really making up for all the gains coming in for the Nifty 50. So it is really concentrated on a few stocks performing well today. Always important to remember it's not broad-based, because from the banking side, ICICI Bank is the one which is the biggest dragger in trade. Also Larsen & Toubro, HDFC Life, HCL Tech, and it is a drag coming in from the IT space. Remember, it's one of the only few sectors in the market today which is dragging down, and also Wipro is down after its results. Let's take it straight to an expert joining in for more on the market momentum and how to read into today's trade. Sachin Shah, who's the Executive Director and Fund Manager at MK Investment Managers, joins in now. Sachin, pleasure talking to you on NDTV Profit. What do you make of the momentum? And of course, the gains are there also because of oil prices and Middle East. But now we are really looking at the earnings season coming in and also lower than expected monsoon. How much of that is really playing out?
Yeah, hi. Thank you so much for having me on the show. Always a pleasure. Yeah, so I think clearly, the valuations are very reasonable even at this point in time. So we've seen some decent recovery in this first half of April after the sell-off that we saw, or rather we witnessed in the month of March. So I think we've recovered nearly 80-90% of that sell-off in this month. But I think the way to think about it is that clearly, the valuations are very, very reasonable because even if you see on a 1 year forward, the Nifty might be trading in the range of 20 to 22 times, depending on whatever growth forecast that one may take at. But I think the way we are thinking and the way we are communicating to our investors is that if one has the next 3-year perspective, there is a very decent probability of one can make a good mid-teens kind of returns over these 3 years on a compounded basis. That's how we are positioning ourselves.
All right. But Sachin, if you really take a look at the market in terms of the IT sector, of course, two large companies have already given out their results and the market has been disappointed with those, and even the global markets, the ADRs have shown a downtick also coming in from the dollar revenue, AI and the growth outlook and the guidance given by these companies. How do you read into the big boys of the IT sector?
Yeah, I think there are still few more companies, I mean, even within the large companies, whether it's Infosys, HCL Tech, Tech Mahindra, some of these companies are yet to deliver the results. And we are quite optimistic that some of these results will actually be pretty decent, and even more the outlook for the next year should be even better, because even for the companies like TCS, what we have seen is that the order book and the new business inflow has been very, very strong. So our sense is that the valuations are factoring in very, very decent risk-reward ratio as far as some of these large IT businesses are concerned.
Right. We yet to see some of the other big companies and then get a better sense on the IT sector. But Sachin, if you really look at now, the war doesn't look like it's getting over anytime soon, though there is a lot more sanity on that particular front. But our oil prices, and especially remember the Russian oil, which we were getting at a discounted rate, is also now not extended by the US. That waiver is not extended. That will continue to put pressure on our growth outlook, on our balance of payment, and more importantly, on the raw material transportation costs and pressure points building for the companies. How are you segregating ahead of the earnings the sectors which are at risk of these factors?
The way we think about it is that this is extremely temporary. Yes, there has been some supply disruptions, and because of that, you are seeing commodity prices actually, and particularly oil prices, have risen quite substantially.
Yes.
But will this actually be a full year phenomena? Very, very low probability of that. We believe this is going to be a less than a month or a two kind of a event, and we will see again oil prices probably remaining in the sub 80 kind of dollars, because clearly, as far as the war is concerned or the geopolitical tensions are concerned, the worst seems to be over, and which is what gives a lot of optimism that this kind of oil prices will probably not sustain. That's how we are positioning ourselves, that the oil prices probably will come down to sub $80 in the next couple of months, or maybe even before that.
All right, sub 80 levels, that's what experts are also penciling in, $80-90, Sachin. But the moment crude really went below 95, it has picked back up. So we'll have to see what factors really lead to that. But my final question, since we spoke last time, any new trend emerging which gives a good opportunity of buying or any positivity in terms of investments?
Yeah, so like, we did discuss this, that last time was, that time probably We were in the midst of the very thick, very heated kind of an environment as far as the geopolitical challenges were there. And that's why probably I was saying that, blue chips is something where one should be very clearly looking at because the valuations were very reasonable. Now, of course, as I said, the worst seems to be behind there. And we've also seen a decent amount of drawdown in a lot of mid-cap and small-cap companies. So I think along with blue chips, some of this selectively, one can also start looking at fundamentally strong companies, even if they are mid-size and small-size companies.
All right. Thank you, Sachin. Always a pleasure speaking to you and get your expert take on the investment strategy. Thanks.
Thank you.
All right, let's also move across and get a sense on the overall market momentum and what are the pressure points really building on the companies as well. From a private equity investor, let me welcome on the show Rahul Bhasin, who's the founder and managing partner of Bearing Private Equity. Rahul, always a pleasure to speak to you. My first question, how are you reading into the market as an investor in the public market companies as well? How do you see and strategize in a very volatile environment where there are several factors out of our control?
I think you have to look at the larger context in the sense that where were the markets before this entire thing took place, right? And I think that probably I would say the markets were fully priced or on the margin slightly overvalued in spite of the corrections that we've seen over 18 months. And therefore, the sell down which happened in the market, which under normal circumstances, any sell down because of wars is usually a very good buying opportunity. And most of the recovery happens within a 6-month period anyway. The incentive to jump in and buy that quickly was probably less than would be under normal circumstances, just because of the initial starting point. Does this mean that structurally the Indian market is not going to yield attractive returns? Not at all. I think the Indian market probably is going to yield the best returns. But we have to understand that we're a little bit out of fashion also in terms of capital allocation globally, because the hottest sector in the US is the AI and its supply chain. You find elements of the supply chain in markets like South Korea, in Taiwan, and you can see these markets are bouncing very quickly. But if you look at other markets which the government, which the investors feel don't have much of a say or stake in the AI ecosystem, mind you, I don't agree with that assessment, but what's the consensus? Markets like maybe Indonesia, Malaysia, Philippines, you see absolutely no bounce of the lows. Right? And the reason I'm saying I don't agree with that assessment is that ultimately, if AI has to be monetized, there will have to be an application layer which is built on the initial architecture and the infrastructure layer which has been built out. And that application layer, I think Indian companies will have a big role to play in actually developing that whole ecosystem. So I think India is actually going to be a beneficiary of that ecosystem, not someone who's going to be a victim of it. And therefore, if you look at the network impacts of that and the linkages around that, I think the Indian market should do just fine from a medium and long-term perspective.
Right. So, Rahul, you were talking about the AI trust in the IT space and how India is really going to stack up in that. And India is going to be a beneficiary because of the critical abilities that we bring in. That's well pointed out. But, Rahul, if we really look at the investor climate from the private equity space, which look at public market investments like yourself, what would be the strategy at the current moment in terms of valuations? Are they mouth-watering enough? And which are the pockets which are looking more attractive? Or is it going to be wait and watch in the midst of volatility?
Nisha, for people like ourselves who invest in public markets and private markets, I have to say that the private markets still continue to be far more attractive than the public markets. And this is a cyclical thing. It goes, it switches every now and then. But at this moment, Definitely the deployment of capital from our side is much more focused on the private side. And if you think about the world, and one of the phenomenons in the world today is the fact that the rate of change is accelerated, and AI is driving that in a big way because I think the productivity of every scientist has become 3 to 5 times. And if you look in the world, we have probably more scientists and engineers working and living today than have lived cumulatively in the history of mankind. So it is actually leading to a lot of technological change and improvements and productivity gains. And what is also happening is that the structure of markets is also evolving faster than ever. So if you take any time period, you take the last 100 years, 50 years, 10 years, 5 years, 3 years, you'll find that the constituents of the large indices worldwide are changing faster than they've ever changed. And in this kind of disruptive kind of global ecosystem, it is younger, disruptive companies which show far more, potential for generating that alpha that people like us look for.
Those
That's where we are
alphas.
finding much more opportunities.
All right. So you said private sector is the one where you're finding more opportunities. But and you also said that India is much better stacked in the compared to the other Asia Pac countries that you look at. But Rahul, to that point, my question is that a lot of experts and FII outflows have also shown that India is worst affected because of the crude dependence that we have, and that is one point which is hurting our markets. So considering that point, not from the market perspective, but from business perspective, of course, it has transportation costs going up and several of the intermediaries of crude and oil and energy, which are impacting the price points and also adding to the inflation and then the supply chain constraints. Putting all that into perspective, in your portfolio companies where you have a lot of visibility, from your vantage point, what are you observing in terms of the pain points of the companies?
I think one should step back a little bit and see, what's the immediate impact of this entire incident that has taken place. Well, the reality is that oil has gone from, $60 a barrel to $120 a barrel plus. Now, that means a $60 increase. India's sort of import bill goes up by about $2.5 billion for every dollar increase, which means that's $150 billion increase. Now, in a $4.3 trillion economy, that's that's more than a 3% impact on GDP. A 3% impact on GDP, will increase fiscal deficit for sure. It'll increase inflationary pressures. Now, the real issue is this here to stay or is this going to go away, and is this temporary? Because if it were here to stay, we have all kinds of issues. But there is also another kind of issue which is there and, which is going to cause temporary disruptions. And if you go sector by sector, I think the thing which I think one should look at most closely is the fertilizer sector. We, I think, use about 18 million tons of urea every year during the Kharif season, which means that during the planting in July, end of June, July. And if you look at the stocks that we had as a country, I think we had about 6 million tons. And if you look at the depressed gas supply, we are going to be short by 3 to 5 million tons of urea. Now, is there an opportunity in this? I think this is a big opportunity in this because I think that as a country, we use too much urea and it's causing all kinds of environmental problems. I think it leads to planting the wrong kind of crops. It leads to, believe it or not, a lot of the pollution problems in northern India because the PM 2.5 is largely accounted for by ammonium sulfate, and a lot of that ammonia in the air is because we are using too much urea. And we sort of sell to the farmer urea at 266 rupees a bag, whereas the cost to the government's over 2,000 now. Can we manage the demand because of the supply shortage and actually structurally improve the economy and the allocation and the planning of crops? Yes, I think it's a big opportunity. but the powers that be have to look at it from that perspective and that lens and drive that kind of reform. Now, DAP is also going to be in marginal short supply, maybe 1 million tons off in terms of what we can produce. But there are many ways of actually complementing and supplementing that phosphatic input and maybe even using the gypsum, sort of reducing the sulfur content from it, and actually, having much more. There are a lot of economic opportunities which are thrown up when there are these kinds of shortages, and I think that if industry were to focus on those opportunities, I think there's a very bright future. And the companies that do look at the entire disruption as an opportunity and not just as a pain point, I think they'll do very well.
All right, Rahul, that's a great, idea that you have really spoken about. That is to find alternates to the fertilizer products that you were talking about, and which are these alternates that can really pick up the momentum and look at the business opportunity also because of the shortage of urea. So fertilizer space and the products that are used there, those are the components that you would be aiming for, as well as a new opportunity in this environment. But always a pleasure speaking to you. Thanks so much for joining us and giving your views on the overall market as well as the corporates. Thank you.
Thank you.
Thanks. All right, moving on. Wipro is a stock which is in focus today. Its IT sector overall is dragged down because of the disappointment on Wipro stock as well. Almost 2.7% down on Wipro, which has delivered, remember, Q4 results in line with the street estimates. However, the stock is down in trade today as the company's CEO, Srini Pallia, while speaking to NDTV Profit, said that despite the global headwinds, the investors are still bullish on the IT sector and are actively investing in AI. Let's listen in to what else he has to say on the company's order pipeline.
So first and foremost, if you look at our current Q4, the results that we have declared, 3 of the 4 SMUs have actually shown a sequential growth, whether it's Americas 1, Europe or APMEA, and they have shown 3 consecutive quarters of sequential growth. I think we had a challenge in Americas 2 of 2 specific customer issues. One was a client changing the direction. Other one is where we won a large deal, but we have not been able to ramp up enough. Second, if you look at the pipeline as of today, it is very secular across the industries and across the markets. And that gives me a good comfort that, despite the geopolitics that's going on, trade and tariffs that are going on, the clients are being very resilient and they're investing in IT. And these areas are AI, data and cloud, which is very predominant. So to me, the opportunities going forward is not only leveraging AI for reimagining the client process, but also demonstrating AI in their run and operate and change and transform programs as well.
Right, so that was the management of Wipro. Of course, the guidance is something that disappointed the street. Now on to another important development, and billionaire industrialist Gautam Adani, the chairman of Adani Group, has become Asia's richest individual, overtaking Reliance Industries chairman Mukesh Ambani, according to the latest Bloomberg Billionaires Index. Now, Gautam Adani's net worth rose to $92.6 billion, placing him 19th globally, while Mukesh Ambani slipped to the 20th position with a net worth of $90.8 billion. Now, the reshuffle at the top highlights the ongoing volatility in the global wealth rankings in 2026 amid rising geopolitical tensions and also market fluctuations. All right, apart from that, remember, we are in the midst of earnings season, and Varsha, my colleague, is joining in with all the important earnings of the day. Varsha, what all is on your list today?
Well, let me start with Wari Renewables Technologies. If you see good set of earnings, strong set of earnings, top line growth was around 131%. There was a drop in margins year on year, but if you see this sequentially, the margins were in line, and from the last 3 quarters, company has been delivering the guided range of margin. Well, onto the revenue was up almost 2.5x, EBITDA was up 63%, net profit was up almost 66%. Company, is also expecting more than 15% of EBITDA margin going forward, and they're also venturing into BESS, that is battery energy storage system, and of course the data centers. Next on the list is Angel One. Overall, if you see, there was a better broking realization that the company has seen. Company is also raising 1,500 crore via NCD and is also investing 150 crore in each arm, that is Angel FinCap and Angel One Wealth. Onto the numbers, if I want to talk about, revenue was up almost 9%, EBITDA was up 13%, margins were at 41% versus 39.7%. 40% last year, and net profit was up 19%. Then you have VST Industries. Overall a strong set of numbers because the volume growth in Q4 was up almost 3%. There was a revenue bump up. This was seen on account of increase in GST. The margin improvement that you're seeing is on account of pre-buying of raw material at a cheaper cost. There was a strong FY26 volume growth of around 8%, and Q4 numbers are basically not comparable due to removal of cess and hike in GST and excise. But management is expecting a challenging year going forward due to the geopolitical instability that we have seen. So overall, these are three companies which are buzzing on the back of earnings as of today.
All right, Varsha, thank you so much for getting us the whole list of earnings to watch and earnings that are on our radar today. Now, India's market valuation is little overdone and deserves a re-rating in the upside. That's the word really coming in from Mark Matthews, who's the head of research Asia at Julius Baer. While speaking to NDTV Profit, he said this, listen into that excerpt of that conversation.
India deserves to be re-rated to the upside, and I believe that is happening now. It started, it will continue. I've seen several statistics to look at where India was previously at the sort of levels it's at now in terms of its 200-day moving average or its price earnings ratio or its various other valuations, but I'll just give you one, which is that in the last 20 years, there were only 2 other times that the Nifty's price to book ratio reached 0.6 times that of the S&P.
All right, that was a word coming in from Mark Matthews. Completely out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thank you so much.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated-listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Pit with all the action in the markets today. Sharad, good afternoon. What are the cues that you're picking up? It's the last trading day of the week.
Good afternoon, Hiral, and it seems like it's a wonderful Friday as well. Of course, it's advisable from the traders to keep your positions light because a lot of announcements might come geopolitically. But nevertheless, a good positive momentum is coming in the markets, Hiral. And I'd like to also point out that traders have stated that it's slightly a sell on the rise markets as well. Largely, we see aquaculture, power, ancillary, tobacco-related stocks, all of them doing well in the trade as well. Of course, stock-specific news flows are being developed here. But Nifty Bank, if you look at it, a good strength is coming in, and it seems like it will sustain going ahead as well. Also, majority of the asset classes are still stuck in a range bound, and the rupee is maintaining its strength. But remember, one important thing I would like to point out is if you have trading positions, keep them on a low basis, especially going into the weekend. And lastly, I'd like to point out the overall earnings which are there in the banking space. That is where you should be focusing on, and that is of course the ICICI Bank and HDFC Bank, and these are the triggers which should be in your radar as well. But enough of these triggers. Hiral, what are the important stocks which should be there in your radar, which should be in the focus?
You know, a lot of packs that are moving in trade today, Sharad, and let's quickly look at the watch list. Wipro, the largest buyback is what they've announced, but the guidance has been weak, and that's the reason why you're seeing some bit of pressure there. Cement companies are in focus as well because the fuel and raw material price increase is what could be impacting. And in consonance to this, the kind of price hikes that they have to take is what the focus area is. VST Industries Q4 numbers have improved, strong moves there. Again, strong execution by Waaree Renewables as well. HDFC Bank will be reporting numbers tomorrow. The asset quality is something that will be watched out for. And ICICI Bank, the margins are expected to remain flat, so that stock is going to be in focus. RVNL has been declared the L1 bidder for a 967 crore project, and that's the reason why you're seeing some smart moves coming in on that one. A strong business update by Kolte Patil, and it's very interesting to see how the real estate pack has actually evolved because it's been a pretty mixed trend in terms of the business updates that have come in so far. And lastly, MMTC, that stock has been buzzing in terms of volumes. But let me head across to my colleague Sharad again to take the rapid fire with Akshay Bhagwat. Over to you, Sharad.
Thanks a lot, Hiral. Good afternoon, Akshay. It's always a pleasure to have you. We'll start our rapid fire segment. I'd like to take your views on HDFC Bank. It comes out with its numbers tomorrow. How is the positional setup looking like for HDFC Bank?
Good afternoon, Sharad. So it's a neutral setup for HDFC Bank. 820 and 780 is the trading range. Only above 820 is where the breakout is on technical charts.
And of course, the second bank is also coming in with its numbers. ICICI Bank, is there any alpha to be made here, or that's also a neutral setup?
Positive chart setups are better than HDFC Bank. The support is 1320 and trading momentum can see a retest of 1400 on short-term parameters.
Right, VST Industries, I want to just get you on that. Important announcement, of course, coming on the back of earnings, but a good move coming in. Good time to partially book profits, or there is more strength going ahead?
I believe there can be more strength, but it will take some time to cool off. 255, 260 is the support zone from where it can again pick up momentum. 290 is the broader target for VST Industries.
And Akshay, your views on Wari Renewables? Numbers have been really strong, good volume buying, management commentary also coming in strong.
A bit overbought on charts, so fresh buying not advisable, but target zone, if you are holding, keep it open till 1260.
Right, a spate of orders coming in for RVNL as well. What does the charts suggest?
RVNL, I think it's better to book out profits from short-term trading purpose here.
Book profits on that. Kolte Patil, strong Q4 numbers, especially on the collections operation front. The operational numbers I'm talking about. Your views on that? Any good positional setup?
Yeah, positional setup is good, but 400, 410 is a strong resistance. Book out profit from short term at 400, 410 range.
Right. Your views on MMTC? It's generally a low volume counter, but definitely whenever action comes, there is interest. Any view on that?
Strong resistance at 73, almost near the resistance zone. Book out profit around 72 to 73 zone on short-term parameters.
All right, that's the rapid fire round coming in from Akshay. But over to you, Hiral. What are the stocks you're gathering from Google Trends?
Let's see, because it's always interesting. Last couple of days, Sharad, you've seen a Ola which has been trending yesterday. You had the entire power pack that was up in trade, from a Tata Power that was trending with a Suzlon, Reliance Power, and some bit of it continues in today's session as well. GMDC has been interesting. After that strong upsurge, you're seeing some bit of profit booking that's coming in, so that stock has been in focus. And your Rail PSU ETF has been in the works this entire week. Let me actually take a quick question with Akshay. Akshay, from the railway pack, because you have the Grow Rail ETF, which has been trending on Google Trends. Anything from the railway pack that you like?
Yeah, good afternoon, Hiral. For the railway pack, yes, the momentum is already caught on, and if you're looking for stocks here, I think IRFC looks positive, but you need to give this some more time. The support is around 100 and 102, and I'm expecting potential upsides till 112 to 115.
Okay, so that's with regards to where the railway pack goes as we speak. And the quick view on the GMDC. The profit booking of around 2.5% with the strong surge that has come in. How would you advise investors to look at that one?
Strong breakout on technical charts with strong volumes yesterday at levels of 640. Extremely positive on technical charts. You can consider buying this at current market price. Trading momentum is strong. 780 to 800 can be the potential upside targets.
With regards to Google Trends. But thank you so much, Akshay, for joining in. Always a pleasure to speak to you. But Sharad, Wipro from the IT pack has been under pressure, and it's going to be interesting to see if the buyback comes to support it.
Exactly, that's the important question. And joining us is Jasmeet here. Jasmeet, Wipro is down because of buyback or because of earnings. What's the reason for this fall?
Well, the overall buyback is helping the stock to stay up, but the overall Q4 earnings, that's something to watch out for. Now, in terms of the key takeaways, we did make a note that the numbers did come in line with the estimates, but the overall CC growth was softer. We're expecting a CC growth of 0.5%, but it came in at 0.2%. While secondly, the overall pain which we see in the BFSI segment in Americas too, being the largest chunk of the business, those sectors are facing a lot of trouble. While thirdly, overall deal win came in terms of what we're expecting, that was in line with it. But apart from that, the overall guidance commentary for Q1 remains a key focus. Now, what they've given is they've given a negative 2 to 0%, where the street was expecting between 0 to 2%. So we see a negative commentary also. While this negative commentary comes on the back of the soft Q1 that the management is seeing, also they see a segment issue in terms of BFSI. That's why the stock is down and tumbling in trade. Now, in terms of the key brokerages, most of them have given underperformance rating by this particular counter and also cut the target price. Well, now we have something like Jefferies, which has maintained underperforming the particular stock. And what they see is they see overall Q4 was below the estimates. Further, they also make a note that the overall acquisition, the inorganic growth is working well for the management, but the organic side of business is tagging in trade. So all in all, we do see brokerage being bearish on this particular counter.
Right. So brokerages are turning bearish. Thanks a lot, Jasmeet, for that. But hold on. Management also has to say something important for Wipro. Do listen in.
So first and foremost, if you look at our current Q4, the results that we have declared, 3 of the 4 SMUs have actually shown a sequential growth, whether it's Americas 1, Europe or APMEA, and they have shown 3 consecutive quarters of sequential growth. I think we had a challenge in Americas too, of 2 specific customer issues. One was a client changing the direction. Other one is where we won a large deal, but we have not been able to ramp up enough. Second, if you look at the pipeline as of today, it is very secular across the industries and across the markets. And that gives me a good comfort that, despite the geopolitics that's going on, trade and tariffs that are going on, the clients are being very resilient and they're investing in IT. And these areas are AI, data and cloud, which is very predominant. So to me, the opportunities going forward is not only, leveraging AI for reimagining the client process, but also demonstrating AI in their run and operate and change and transform programs as well.
So that's the management commentary coming in, but they've also announced its largest ever buyback worth 15,000 odd crores, offering a 19% premium to the current market price at 250 rupees per share. Soumya joins us with all the details in terms of the calculations and what the gains could look like in terms of the acceptance ratio, depending on how the retail participation comes across. Over to you, Soumya.
Well, the buyback amount, that is 15,000 crore, yes, it is the largest ever, and this is the 6th buyback that the company is doing. Price is set at 250 rupees, which was at a premium of nearly 19% compared to yesterday's closing price. Now this premium must have increased. The buyback size is 60 crore. 5.7% of the equity. Now, this is not the largest ever equity that they're buying back. In 2017, they bought back close to 7.1% of the equity. Now, the key question here, what's in it for the retail shareholders? 15% of this buyback amount is reserved for retail shareholders. That is close to 9 crore shares. And retail shareholders are those who own less than 2 lakh rupees of shares worth in Wipro. Now, in case of Wipro, assuming that the share price is at around 211, anyone who owns approximately 950 or less number of shares is a retail shareholder and will be eligible in this criteria, that is the retail criteria of buyback. Now, what could be the gains for the retail shareholders? Now, gains will completely depend on what the acceptance ratio is. And what acceptance ratio is, it depends on how many shares actually the company is buying back from you. Now, this acceptance ratio will completely depend on what kind of response retail shareholders are giving. And in the past, if you look at the acceptance ratio have been in the range of around 53 to 100%, which means that if you're applying for 100 shares, if the acceptance ratio is 100, that means all the shares is something that the company will be buying back. And if the acceptance ratio is 53, then the company will buy back just 53 shares out of the 100 shares that you have applied. As I was mentioning, the acceptance ratio in the past has been in the range of around 53 to 100% that we have seen over 2016 to 2023. But if you look at the current shareholding pattern, given the fact that this buyback is happening at a premium, if all the retail shareholders decide to give their shares for this buyback, then the acceptance ratio could be as low as 25%. So what could be the gains? If acceptance ratio is as low as 25%, then the gains will be just 4.8%. If the acceptance ratio is 50%, then the gains will be 9.5. At 75, 14.3. And if the acceptance ratio is 100%, then the gains would be around 19%. But this is again assuming that the cost price is 211 rupees per share. But do remember that the company is yet to announce the record date for IPO, and investors usually for short-term gains prefer to buy company shares for the buyback near to the record date. And lastly, we are also giving you the share price performance after the buyback that we have seen. In case of Wipro in 2016, it was largely muted, not much of gains. In 2017 was a good year after the buyback announcement. We have seen solid gains coming in the share price of Wipro. 2019, again, a muted year. 2020, it was mixed. Only 3 months post, we have seen a good comeback. And in 2023 also, post the buyback, the share price performance was largely stable. 3 months gains were around 10%, 1 month gain was 8%, and 1 week gain was close to around 5%.
Okay, so that's with regard to the buyback. Thank you so much for that. Asta, how are you looking at, in fact, let me first welcome in her as well. Asta Jain, Senior Research Analyst at Hem Securities comes in. Asta, good afternoon. How are you looking at Wipro in terms of earnings? Because now you have Wipro and TCS, both of them reported their numbers. If you look at the PEG ratio, very much similar, but I think there is a little bit of uncertainty when it comes to Wipro versus a TCS and the buyback now with a Wipro. How are you looking at both these counters?
Hi, good afternoon. Talking about Wipro, first of all, numbers were not a great set of a number, and definitely what was not liked by the street, I suppose, is the weak guidance, and I think that is denting the market sentiment right now. So, what we believe that company is not able to post strong set of numbers. In fact, there is a strong disconnect between the deal bookings and the revenue growth. So, we really need to see that part also. My idea here is with this AI-led, wave going on, definitely companies witnessing some sort of a market share loss as well. Now talking about buyback also, although buyback companies doing at a premium price, but still I believe that stock can move lower from here on the basis of the weak earnings and the weak guidance which company has presented right now in front of us, and hence we believe that this stock is well poised to move till the level of 185 or so. So right now, idea here is those who have this stock in their long-term portfolio should remain holded or should remain invested in this counter. In fact, we are recommending our clients to participate in the buyback as well. But for the new shareholders or new entry, we are recommending just to wait for some more time because we believe that the stock can move more up downside from here.
Right. VST industry is also something we should like to talk about. And if you look at the charts, the smoking hot returns are coming in. And of course, to give us more details about it, is this a one-off or is it going to be there going ahead? Joined in by Mahima. Mahima, VST Industries, what's the entire situation? Because other tobacco stocks are also burning high.
Right, so Sharad, first of all, I like the wordplay, but the fact that Q4 numbers have fared out very well as compared to what the street was expecting. I think FY26 volumes were up almost 8%, and that's something was not expected. In Q4 as well, there was an uptick of 3% in terms of volumes. Plus, I think the raw material pricing, because they would have probably stocked up on inventory, and that's why the cost of raw material for them has gone down, and which has aided the margins. That's something that the street has liked. In terms of the Q4 numbers overall, they're not comparable because of the excise duty hike and the GST hike coming in for cigarettes and the removal of cess. So not very comparative when it comes to YOY basis, but management commentary is slightly on a bearish note because what they're saying is that geopolitical instability in the Middle East continues to weigh on the unmanufactured tobacco that they sell, and given the extraordinary tax increase, a challenging year awaits us. But Nuama has an interesting take on this one. What they're saying is that the worst is behind for all cigarette stocks. Going forward, double-digit volume is something that you cannot expect in FY27, but price hikes will slowly and sharply happen going forward in a staggered manner. They don't expect this tax hikes to be withdrawn, but for the next 2 to 3 years, they're not expecting any more tax hikes coming in for cigarettes. So that's why they're saying that FY27 is probably where there'll be some heat that we'll see, but FY28 onwards, all of this should stabilize. And lastly, in terms of valuation stand, I think VST is the one which has lowest valuations amongst its peer, trading at 15 times right now, as compared to Godfrey Phillips at 26 times and ITC at 19 times. So this is the overall view of how Q4 has panned out and what's working for VST Industries.
Thanks a lot, Mahima, for that. It seems like worst is over for the tobacco stocks. But Asta, I want to get you on this. First question is definitely going to be the price hikes that's coming in. Will that try to offset the expected volume loss going ahead? And remember, this product is an inelastic demand. So I wanted to take your views on this tobacco industry and these tobacco-related stocks.
So yes, we believe that with the price hike, definitely the management will going to take that into effect. But what is major concern right now, which I believe is that the kind of tax increases. In fact, management has also mentioned in their commentary that with the extraordinary tax increase or the tax burden, which is awaiting for them for FY27, definitely this year will be a challenging year for not only VST Industries, but I believe the all companies which are there in the sector. But right now, markets are just celebrating the kind of numbers this company has posted, and hence we are seeing a very, very good, move in the stock prices. But for the long-term purposes, my idea here is just don't enter into this counter at this point of a time, seeing after the results, because in the long term we should work out for the EPS going ahead, and we believe that forward earning multiple basis, definitely that will be something which we really need to look out how the company will able to manage the tax burden which it will be facing in the FY27. So right now, just hold this counter, don't make a fresh entry into this counter. This is what we are recommending our client as well. But as for now, we believe that yes, tobacco industry and the counters in this sector may move upside for some time from now. But the real thing is what we need to see is how they will going to behave on the tax front.
Okay, so that's VST. Thank you so much, Asta, for that. Always a pleasure to speak to you. But moving on, Renewable Solutions is in focus after launching an AI-driven trade finance platform aimed at automating manual, paper-based banking workflows. Joining us on the show to talk about this is Ashish Rai, Group CEO, Renewable Solutions. Ashish, welcome to the show. My question to you is, the company has unveiled, the AI-native trade finance platform. What will this platform do, and what's the kind of impact you're seeing in terms of overall business?
So, hi, Hiral. First of all, thanks for having me. Look, what we have launched is a full end-to-end platform for trade finance that has been built from the ground up to be AI native, right? I think some year back, we launched our banking AI framework called Orient AI, and we've been working on what does it take to really get AI into production inside the banking environment. Trade finance is a very large part of the bank's business, which is extremely rule heavy, document heavy, and we built out both the software as well as the agentic execution on what it needs to look like in the age of AI, right? So I think I built it from ground up. What we call banking software 2.0, first of all, was what our vision was in terms of what we wanted to build out, which is, so what does banking software 2.0 needs to do? It needs to do everything that software 1.0 does, right? Which is where you say traditional trade finance software, like the ones we had as well, it should do everything that software 1.0 does. And then it should do two more things. One, what should the software have to give the rails and the tools to the agents to work on the trade finance process flow, right? How can agents be first-class operators on the trade finance workflow? What tools do they need? What rails do they need? And software should provide that. The third thing is, what tools do the operators need, the human operators need to govern the action of the agents overall, right? So do everything software 1.0 does, plus do those two things. So that's what we built up. We believe this is the first fully AI native trade finance platform built from the ground up. We believe this is completely revolutionary globally, and we see a lot of interest amongst the early clients who we get access to, and we're working on a few pilots with clients, especially in India and the Middle East on this.
Okay, so Ashish, what's the kind of revenue potential that you're seeing out of this? Because I do understand this is a new launch. Your clients must be still testing it out. So the gestation period and the kind of revenues you're expecting.
So we believe, look, overall, our AI play, we've been clear about on the software side. We are going in and rebuilding the software for the banking space, not just trade finance, but also lending, also transaction banking, where we are leading players in, at least in Asia, right? So that is a very significant TAM that we go after. And plus the agentic execution side, which is more of the operational side of the bank, that again is a significant TAM that we go after. We are, give or take right now, so we are, can't talk of the exact results overall, but we are probably in the range of $150–160 million overall in terms of size of the organization. We believe we've declared the size of the markets overall, but I would put it this way, right? Banking IT is almost a $400 billion IT spend globally. Banking operations is almost a $4 trillion spend globally. When you look at both these spaces, both are potential spaces in which you are operating in the agentic execution on the operations side in terms of what can you do to really improve the productivity inside operations in a bank, and on the software side, we play in both those spaces. We've been growing now for the last 4 years at 30% plus. Right, and we feel that the size of these markets is large enough for us to really continue to power our growth at similar pace.
Got it. My other question and the last one to you would be, let's look at Vision 2030 goals that you have. Very strong. What are the specific milestones that you've set for the US and the European markets this year to actually achieve this? Revenue target of 5,000 crores by FY30. How do you plan to accelerate? Because 30% CAGR is really very ambitious.
Yeah, no, it is ambitious, but so we were 375 crores in FY21, right? we will finish 1,500 crores. I can't talk specific numbers because we've not declared results, but whichever number you take at it, we've been CAGRing at 30% for the last 4 years. Every single year, we are probably the only listed Indian tech firm which has grown 30% plus at least the last 4 years, every single year, right? And I think so. We have a track record of doing that. It does not mean every single year you grow 30% plus like we have. There may be years where you grow less, more. There are the external factors you don't control. There, wars, recessions, all that stuff can happen. But over a longish period of time, one, are we competitive enough to continue to drive growth? Yes, we are. Is the market large enough? Yes. Is there headroom for growth? There's massive headroom for growth in the segments that we are in, right? Most of these are many, like almost decadal spend opportunities, whether it's the data center space, whether it's the transit space, whether it's the corporate banking space, whether it's AI, right? So we feel very good about continuing to drive growth. We're not necessarily, we don't have firm multi-year guidance going out to 2030. I think that number that you talk about is extrapolation, probably on one of the interviews. And you're right, if we keep doing 30%, we'll get there. I don't see any reason we cannot. The important thing is to stick to the plan. The important thing is to, so externally we have the qualitative statement of Vision 2030, which basically says we will be a top 3 global player in each of the spaces that we've chosen. We feel determined. We feel very good about our strategy to get there. The focus has to be on product superiority as we are. The focus has to be on AI as we've been focusing, and the focus has to be ahead of the world, right? So I think as long as we stay ahead of the curve, as long as we keep investing behind the products, I feel very good that we can keep driving the growth rates that we are at right through 2030.
Okay, so this is going to be interesting to watch out for. But thank you so much, Ashish, for joining in. Always a pleasure to speak to you. But moving on, billionaire industrialist Gautam Adani, chairman of the Adani Group, has become Asia's richest individual, overtaking Reliance Industries chairman Mukesh Ambani, according to the latest Bloomberg Billionaires Index. Gautam Adani's net worth rose to $92.6 billion, placing him at the 19th number globally, while Mukesh Ambani slipped to the 20th position with a net worth of $90.8 billion. Now, the reshuffle at the top highlights the ongoing volatility in global wealth rankings in 2026 amid rising geopolitical tensions and market fluctuations. Sharad is here with more updates. Sharad, over to you.
Thanks a lot for that, Hiral. And there's an important change happening here, and we see there is a reshuffling of the billionaires, and now Gautam Adani has overtaken Mukesh Ambani to take the top spot in the Asian markets. Now, this data we have gathered is from Bloomberg Billionaires Index. Apart from this, he has slipped to the second position in Asia. And let's talk about the numbers, what matters here. And let's just pull out the important numbers, and that's the overall, you could say, net worth. That's around $92.6 billion, and then it's at $90.8 billion. So that is where the strength is coming in when it comes to the net worth. But apart from that, also the net worth has shown a sharp upward move coming in, and they have added $8.1 billion in wealth this year. So that is a very important update coming in. But over here, there is a net worth seeing a decline, and the wealth is declined by almost $16.9 billion this week, with, of course, Reliance having the highest number of contribution to the net worth as well for Mukesh Ambani. So this is the overall picture which we are gathering in. And remember, in terms of data, 2 Indian billionaires are sitting side by side on this global wealth index, and this is updated from the Bloomberg as well. Gautam Adani ranks 19th globally, while Mukesh Ambani is just behind in the 20th space. Of course, competition is definitely there, and Elon Musk is maintaining a staggering lead from the world's richest individual, especially with the lead which he is giving to the second most richest person in the world. And that is something to look forward. But how Adani Group has fared in the last 1 month is very much important. Adani Green is up 29%, Adani Power is up 23%, Adani Energy, Adani Total Gas. The majority of the Adani Group companies are in a good green, and a good momentum has come up. And even the larger players in the Nifty index, this includes Adani Ports and Adani Enterprises, both of them are above the 10% mark. So this is the entire picture of Adani Group and the shuffle in the Billionaires Index as Gautam Adani becomes the richest in the Asian index. Back to you, Hira.
Thank you, Sharad, for that. It's an interesting update that we are picking up so far, but completely out of time on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top bazaars at Bazaar, all while you grab lunch. But as we do that, quick look at the markets right now. When you talk about Nifty 50, it's looking to be in good spirits with that 70-point uptick also coming in. Even when you talk about Sensex, slightly a better picture that you're looking at actually with that 250-point odd uptick also coming in for the Sensex. When you talk about the sectoral picture, that is sharply tilted in the favor of green, so it's FMCG, energy, oil and gas, media, or even consumption for that matter, that are in good shape exactly in that order. FMCG, of course, leading gains. On the flip side, look at that IT index also, and pharma as well as auto just under a little bit of pressure as we speak. Let's also talk about some of these gainers from within the Nifty 50 pack. So there's something like an HUL, Quality Walls, Nestle India, Apollo Hospital, Power Grid, and even something like an Asian Paints that's holding up in good shape right now. And on the flip side, Wipro, on the back of a weaker guidance where they've, turned a little less upbeat in terms of their growth guidance. That's something that's weighing on the stock quite sharply right now. So about 2.5% downtick also coming in for this particular counter as well. When you talk about HDFC Life, that too under pressure on the back of earnings. Sun Pharma, HCL Tech, M&M and Titan Company, some of your other losers from within the Nifty 50 pack as well. But let's also talk about some of these other sectors as well in terms of oil extending losses and gold prices also gaining. That's the entire picture that we should be talking to you about. And that's also something that's definitely in focus also right now in terms of commodities. That entire complex is top of the radar right now on the back of oil extending losses and gold prices gaining. So oil, of course, you do have that slipping as the ceasefire optimism is rising right now. So that's something that you're looking at in terms of triggers for oil prices. And we have been talking about this for a while. Gold prices on the flip side are gaining. So you're seeing a little bit of clawing back losses coming in as far as gold is concerned. So that's the key picture that you should be looking at. In fact, NS Ramaswamy, head commodity desk and CRM at Ventura, joins us right now. Thank you so much, Mr. Ramaswamy, for taking time out and joining us this afternoon. First things first, I wanted to try and understand what you think about the current picture when it comes to oil prices. They seem to be extending losses just a tad bit, but you do have those supply concerns that are very much top of the mind right now in the middle of an active war.
Yeah, basically what's driving the prices is only the supply constraint, which is a fear. But the demand factor is never there in the picture for crude to be discussed. So the oil prices, whether we talk of WTI or the Brent, which is currently in a narrow range of $4 between each, $93 in the WTI and $97 in Brent. So we feel it is still in the range bound. The entire outcome is all dependent on the way the peace talks happens, how the Middle East turmoil is going to get settled further. But on the macroeconomic side of it, if you were to see, it's only the supply constraint which is building up on the price levels, but never in the demand side. It's a long drawn story for the demand to actually rise and for the prices to move up. So we need to see how it is. It's still in the range bound. We cannot comment whether it's going to further cross the $100 barrel mark in the WTI or maybe beating the 90. But definitely in this range of 92 to 96, it will be a seesaw range.
A little bit of a seesaw range that you're definitely looking at when it comes to oil prices as well. But, are you penciling in higher for longer oil prices by any chance? Because, you do have a bunch of countries, the likes of Qatar, that are saying that you could be looking at the damage that has been made to key oil infrastructure lasting into months to years. That's something that, you're keeping on your radar very much so. So against that entire backdrop, higher for longer oil prices, is that something on your radar?
It will be higher from the pre-war situation, but definitely not like all the expectations in the market talking about $120 per barrel. And those are all a scenario which has been just talked about. But we definitely see it will always range with any news that will come up in the constraint from each Middle East country about the supply or the constraint in the distribution of the oil to the various countries where it is in demand. So that is where we can see probably an upswing which can go beyond 100, but certainly not breaking the range bound of 90 or beyond 100. So we are looking at that range with whatever constraints we are at the moment, but never a scenario where people talk about 120 per barrel or 150 the way it's going to spike. I do not see that really happening because there will be always an OPEC which will, after the ceasefire and after the constraint will be managed, it will ensure that the supply factor is also maintained. So I don't see it 120 and things like that, the spike in the long term, which you were asking about. It should be around 100, 105, or on the downside, it may even touch around 90. So the seesaw, which I said is the short term range, long term is only up to maybe 100, 105.
No, absolutely. And 120, of course, is something that a bunch of brokerages have been talking about. That's something that's been discussed in terms of price levels as well. So you did point that out. So that seems to be a little bit out of the picture for now. But, when you talk about gold prices as well, you do have gold prices that are gaining, and you do have that entire haven narrative that seems to be coming back up. And it was quite surprising at the beginning of the war that, that entire narrative just took a beating. And that's not something that's been top of mind for the markets right now. Seems to be supporting gold prices, bunch of other triggers that you're looking at. What makes it to your list?
Yeah. Gold is a very interesting complex to see in the bullion pack, because if you were to see the gold after touching the high of in January 29th, $5,500, it has corrected, it has declined from those peak by almost 27% during March. The March recovery of gold cycle was a low of around $4,090 from 5,500, which is close to around 27%. Basically, the persistence of a very high interest rate regime or a tighter financial conditions are acting. It's actually a near-term headwind for gold. The basic constraint which we can see is inflation is the pressure, the structural forces. If you were to see, it is a simultaneously it is acting. When I say the structural forces, we are seeing that the inflation is giving an upside kick towards gold, whereas the elevated real yields which we are talking of, or the Fed, that the structural things about the interest rate is suppressing that point. So gold is neither a correction nor a recovery. It's a range-bound consolidation phase and not having any directional reversal that could be seen in gold.
No, absolutely, but it's still set for a fourth straight weekly gain, and that's also something that you're looking at. So in terms of fundamental factors, what are you then penciling in going forward as well? Ceteris paribus, given that all things, if they remain constant, what are you then penciling in for gold prices? Or what's the broader setup that seems to be emerging here for gold?
See, the broader setup would be that structural floor, if you were to see, by the central banks. It's not getting disturbed by any rate cut decisions in the short term. So the structural demand is continuously there. If you were to see, even the central banks are in fact bringing back gold home again. If you were to see, almost 59% of the central banks now store at least part of their gold reserves in their domestic situation. So the way the confidence or on the geopolitical conflicts that is happening, so that is very clearly talking about a de-dollarization. There is a talk of, so the basic impact, the shift away from the dollar is apparently seen. So we need to see, after the financial liquidity constraints are all eased out, we would see a lot of buying again happening in the central banks. We have been witnessing that in 22, 23, year 24, almost 1,000 tons. And then maybe 25 was close to around 1,000, or maybe 865 tons. So we are going to see a bounce back, not in 26 at least, but in the year 27 in the long term. The structural base is very, very clear that the central banks are going to buy. So this is not a surprise, and this shift away from the dollar can be a very supportive thing. Adding to that, and the retail segment, if you were to see, there are all sort of ETF and other things. Every small correction, as I said, gold is a consolidation phase. Yes. It's not on a directional reversal. So we are witnessing that every dip, small dip or correction, there is a heavy buying through the ETF channel also. Right. So we are going to see that happening going forward for the year 26.
No, absolutely, and that makes a lot of sense. In terms of 2025, of course, that was a stellar year for gold, and it's quite difficult to really beat some of those numbers that we've seen coming in for 2025 in any case. But for investors who are sitting on the sidelines and wondering what they should be doing, if you're looking at fresh buys or if you have chips on the table, just very quickly before we let you go, what should be the strategy for gold and silver investors if they have chips on the table and if they're looking for fresh buys right now?
See, the immediate economic data, which is very, very crucial, is the April 29th FOMC meeting of US. So that is going to be the formal policy anchor for gold. So if you were to see, there are three scenarios which can spring up for 29th April. It could be hawkish note. If that is an hawkish note, gold is likely to trace back with a downward pressure, and the March low can be tested again, which we just now talked about, $4,090, which is a scenario when it will become a hawkish decision from the FOMC. If it were to be a normal base case situation, the gold consolidation can take it a swing between $4,600 and $4,700 or so. But the positive thing is, if we are going to see not much of, it's only the energy spike in the CPI inflation data. If that is the case after the ceasefire and all, it could also be a dovish stance which the Fed may take. In that case, gold is likely to recover very fast and likely to boom up to close to $4,950 to $5,000. So we are witnessing that. So when a retail customer is there, when he's trying to take a positions, we need to wait probably till April 29th and then take a call which way the decision has been taken, and all the three scenarios which I just now discussed.
No, absolutely, and thank you so much for summing that up for us very brilliantly. And thank you so much, Mr. Ramaswamy, for joining us and taking time out to give us all of those insights. So there you go. That's what you should be doing if you're looking at fresh buys or if you have chips on the table when it comes to gold or silver for that matter. But let's also look at the KP group that is in focus, particularly KPI Green Energy that's in focus after the company gets interstate power trading license from CERC as well. In fact, my colleague Varsha spoke to Afan Farooq Patel, whole-time director at KP Group, about the kind of benefits and the synergies that the company is going to be having after this particular license. Let's go across and listen into a slice of that conversation.
Afan Farooq Patel, who is whole-time director at KP Group. Mr. Patel, welcome at NDTV Profit. Always pleasure to have you. Just wanted to understand, how does this change your business model beyond generation?
Hi, Varsha. First of all, good morning and thank you for inviting us. We have got the KPI have got CERC power trading license. So I want to give you a small brief about the power trading license. So first of all, in renewable sector, there are two segments. One is producing of power and one is the selling of power. We were producing the power in the Gujarat and we were selling that power in the Gujarat only. Now, by this license, we can go beyond the Gujarat. We can sell the power anywhere in the country. So by this license, our client base have increased. So this is the major benefit of getting this license. So now we will be able to sell the power anywhere in the country. We can buy the power from anywhere in the country, and we can sell that power anywhere in the country. Also, now we can provide a better solution in our business model of RTC and FDRE.
Understood. So, sir, what is the incremental revenue opportunity you are seeing? Maybe, in the next 2 years, what's the revenue contribution you're expecting from this trading business? Because I think now this is the, beyond generation, this is also one of the business that you would be doing in future.
Yes, Varsha. So, first of all, I will give you some brief about the license category. We have got the category 4 license, which means we can trade 2000 million units. As we will sell this unit, we will go upward and we can go to no cap category. So 2000 million units. So you can understand it is approximately 200 crores unit of trading will be done. So as a group, our CMD sir have already given us the target to give the 50 to 60% revenue growth year on year. So 100% by getting this license and by doing this business, we will increase our revenue 50 to 60%, and it will impact our existing business, our existing IPP portfolio. So majorly our IPP portfolio will be increased and its revenue will be included by getting this license.
Right. So, Mr. Patel, any kind of ballpark range, if you could give us, what proportion or how much this will contribute to your revenue in percentage terms, maybe in the next 2 years?
Varsha, for understanding this, you have to understand that we are Gujarat-based company, and the license in the license for revenue part in non-solar hours, we can get the more revenue. And as you know, we can in renewable have two components, wind and solar. So in wind, Gujarat is the highest potential site in the overall country. So we will produce the more and more power from the wind energy and also solar energy, and we will sell it after non-solar. So its revenue which will be generated, it will add on to our IPP portfolio and our revenue. We cannot go specifically 20% or 10%, but yes, it will impact significantly in our revenue.
And also, Mr. Patel, what technologies are you, building up to scale this platform?
Varsha, for this, first we have to understand, for trading already there are the platforms. So first we need the platform for trading, which is PX platform. Then another thing for trading which we need is more important is when to buy, when to buy, when to sell. So it is more about data driven. So we need data analytics and forecasting models and scheduling and open access system. So this is the part for trading. And for generating, already we are generating power from solar and wind. As you know that our group is from last 2 decades, we are generating power from solar and wind. So this is the platforms and these are the technologies which are required for doing this business, trading business.
Right. And Mr. Patel, will this be a margin accretive one or will be driven by volume?
It will be both margin and also volume. How margin? In margin, as you know, country demand after non-solar hours, we get the more price. So we will, by the help of data analytics and forecasting model, we will build our model such that we get more and more margin. So margins are variable, but yes, we will focus how we get more and more margin. We will make such type of models.
Alright, and there you go. So that's the word coming in as far as KPI Green then is concerned. But let's move on to an exclusive now. The NSE IPO is gathering momentum. The government is in talks with top PSU shareholders to participate in the offer for sale ahead of the April 27th proposal deadline. In fact, Shrimi is joining in with some more details here. Shrimi.
Yeah, that's right. What we're picking up that the government has reached out to some of the top PSU which holds chunky stake in NSE to participate in the exchange OFS. And this is coming just days ahead of the exchange request for proposal. Deadline of that is ending on April 27th. And what we are getting sense that most PSU shareholders are now in the process of submitting their plans to dilute stake as part of the upcoming IPO. And NSE expect PSU submission closer to the deadline, and this is important amid the chatter around weak responses. What we are getting sense that NSE IPO is on track. In fact, they expect 4.5% of dilution in line, and in fact more than what minimum public float coming at 2.5% as per the SEBI mandate. Now, do remember the fact that this is crucial as it will deepen the entire NSE proposed IPO. And if you see the chart, which clearly says that the total PSU holding is around 31, slightly over 31%. And at the top of that, LIC holds around slightly over 10%, and followed by stock holding and SBI, which is between 3.5% and 4.5%. Now, this is also crucial because now what market will watch that how much actually stake is coming on the table and at what valuation. And we reached out to NSE for the comment. They reiterated the fact that IPO has been approved by board on 6th of February. And there's no further comment to make, but this is coming after SEBI NOC in the NSE matter. So we are watching and closely looking at the story because this is going to be the most anticipated listing in India stock market.
Absolutely, and thank you so much, Shrimi, for joining us with all of those details. Let's also move on to some other news and updates as well. An FIR has been registered against Anil Agarwal, chairman of Vedanta Resources, along with company manager Devendra Patel and other officials. And this is in connection with the boiler blast at the Vedanta power plant in Chhattisgarh Sakti district that killed 20 workers. NDTV's correspondent Prakash Sahu joins us with some more details here. Prakash.
अभी हम शक्ति जिले के वेदांता पावर प्लांट के गेट पर मौजूद हैं। ये वही प्लांट है जिसने 21 मजदूरों को निगल लिया है और अब तक जो है 15 मजदूर जिंदगी और मौत के बीच जूझ रहे हैं। आपको तस्वीर दिखाते हैं, गेट पर हम मौजूद हैं। यही वो प्लांट है जहां पर जो है 14 अप्रैल को बॉयलर के ट्यूब में ब्लास्ट होता है और जो यहाँ पर एक भयावह स्थिति निर्मित हो जाती है और कहीं न कहीं इससे अब तक जो है 21 मजदूरों ने जान गंवा दी है। सबसे खास बात बता दूं कि यहाँ पर जो है घटना स्थल पर मौजूद बॉयलर मुख्य निरीक्षक द्वारा जो है जांच तकनीकी रिपोर्ट में यह उल्लेख किया गया है कि जो बॉयलर फर्नेस के भीतर जो है अधिक मात्रा में ईंधन जमा हो गया था, जिसके बाद जो है ये जो ब्लास्ट है वो हुआ है। तो कहीं न कहीं एफएसएल की टीम ने भी एक रिपोर्ट जारी किया है जिसमें ईंधन जो है अधिक हो जाने की वजह से जो ब्लास्ट है उसकी वजह बताई गई। तो कहीं न कहीं एक बड़ा मामला निकल के सामने आया है और कई सवाल खड़े हो रहे हैं, क्योंकि इस मामले में लगातार जो है प्लांट बंद था, तो आखिर इस मामले में ध्यान क्यों नहीं दिया गया, जिसकी वजह से जो 21 मजदूर हैं उन्होंने जान गंवा दी है। और इस मामले में अब मैं बता दूं कि लगातार कार्रवाई की जा रही है और पुलिस विभाग ने जो है प्लांट के जो चेयरमैन है अनिल अग्रवाल, प्रबंधक है और अन्य जो है लोगों के खिलाफ 8 से 10 लोगों के खिलाफ एफआईआर दर्ज कर दी गई है।
Alright, then there you go. That's the unfortunate update also coming in terms of that particular boiler blast. The probe, of course, is underway, and that's something that we should be looking at later as well. But first things first, let's take a look at Gujarat Gas and VST Industries. Those two counters are in focus and buzzing away in trade. There you go. That's about 8% uptick coming in. For something like a Gujarat Gas, when you talk about VST Industries, it's about a 10.5% uptick. Nomura, in fact, has upgraded the counter to a buy rating. They're talking about how the Iran crisis, that's going to be providing multiple tailwinds when it comes to this particular counter, and the correction could be creating attractive entry points as well. And their outlook in the Morbi ceramic cluster is quite hopeful as well. Domestic PNG getting a tailwind from government push amid LPG shortage, also something that they've in fact managed to flag. Other than that, they're also talking about how they've raised the FY27 EBITDA estimates also, and that's something that you're looking at in terms of accounting for better margins, and that's the reason why that particular stock is buzzing away in trade, with that sort of outlook also shaping what the next few quarters are going to be looking like. When you talk about something like a VST Industries, you're looking at the fourth quarter on a standalone basis where the revenue has seen quite the uptick. So about a 31% uptick coming in for the revenue. When you talk about EBITDA margins, they're also at 45.6%, which compares to 19.9%. So that counter, of course, buzzing away in trade. But that's all the time that we have on the show. Thank you so much for tuning in.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated-listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me Soumit Sarkar and my co-anchor Mahima Vachrajani. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. So what's on the show today? Firstly, we'll be speaking with the management of GHV Infra. Now, the company's market capitalization is just 2,200 crore rupees, but in the last few days of a couple of months, the company has won orders worth nearly 3,200 crore rupees. But yet, we are not seeing any big move coming into the share price. So, what's the way forward is something that we'll try to decode with the management today on the show. Now, apart from that, we'll be talking about stocks like VST Industries. Strong set of numbers coming in, and this has also led to a bump up in other cigarette stocks. What led to this strong performance and what lies ahead is something that you'll get to know on the show today. Apart from that, a host of other stocks, firstly like Kelton Tech, strong business update coming in, collections are up 18%, stocks been gaining in trade. Then shrimp stocks are also buzzing. Avanti Feeds, Apex Frozen Food on the back of FY 2026 marine data, which is up nearly 14% on a YOY basis. This data came in yesterday post-market, and that's the reason we are seeing this kind of a move in all the counters in trade today. And lastly, we'll be also speaking about Ram Ratna Wires, and the stock is up nearly 21% in the last 1 month. Q3 numbers were on a strong footing. Can we see similar set of numbers in Q4 also is something that we'll try to discuss with our fundamental guest on the show today. Now, if you look at the markets, quite a stable day. In fact, our market is cruising above the 24,200 and closing to 24,300 level now, just 10 points shy of that. We are up around 90 points in trade, and these gains are largely led by Reliance Industries and HUL in trade. If you look at the sectoral indices, it's clearly the FMCG names that have been gaining in trade. All the top F&O gainers, other than Angel One, are FMCG names, and the index is up nearly 2.5% after a very long time that we are seeing this kind of move. And on the flip side, it's only Nifty IT index which is trading in red. Nifty Pharma largely flat on the trade. But when it comes to the Nifty Small Cap index, that's also up nearly 1.5% in trade. But which are the key stocks that have been buzzing?
Right, so Soumit, as you rightly mentioned, the broader markets is doing much better than what the benchmark is doing right now. Both the mid-cap and the small cap 250 trading at its day's high point, both of them seeing gains of over 1% each. For small cap names specifically, on the positive side, you have counters like Bharat Wire, which is seeing an uptick of around 15% Ram Ratna Wires, one of the stocks that we're going to talk about in this show as well, up 13%. You have Muthoot Cap, which is also up around 12%. Kelton Tech, Om Power, VST Industries, all these counters ranging and growing in that range of 10%. Even Ugro Capital is doing fairly well today, up 10%. Something like Saturn Credit Care as well as HMA Agro, India Bulls continues yet another day of gains. I think 3 to 4 odd days it's gained over 20-25 odd % on this one. Global Spirits is also seeing gains of 6 odd %. But on the flip side, you have some counters which are also seeing profit booking today. Electro Steel Castings is one of them, which is down by about 4 odd %. You have RM Drip and Springs as well, seeing around profit booking of 3 odd %. Dave Accelerator also down by about 2 odd %, and Arcade Developers is also down by about 2 odd %. So that's with regards to where some of these names go, and that's indicative in the advanced decline ratio as well when it comes to the overall broader end of spectrum. But as promised, we're today going to talk about GHV Infra. Now, it's an interesting company because in the past couple of months, as Soumit was mentioning earlier,
year as well, right? They've received order over 3,200 odd crores with a company that has a market capitalization of around 2,200 odd crores. But the stock movement has not been very impressive. To understand as to what's the outlook going forward and what's the execution timelines looking like for these orders that have come in, we're joined by Ajay Hans, who's the managing director at GHV Infra Projects, joining us now. Ajay, thank you so much for taking out the time. Mahima, this side. My first question to you is, of course, with regards to all these order wins that have come in the last 2.5 months, right? A huge pile of orders that have order info that has come in for you. Just want to understand as to, first of all, what is your total order book standing at right now, and how much of it do you expect to be executed in FY27? What is the conversion ratio that you're looking at?
Right. Thanks, Mahima, for connecting us. And I think Sumit is also going to join on this conference. So it's great talking to you. A very valid question. As of now, we have an order book of around 12,000 crore. Including these 3,000 crore orders, what we have received, like 1,250 crore from APCO Infra for Jalna Nanded project. And then we have received an order from Dr. America Inc. Dayton, USA for a project of LSTK for renewable natural gas project and fertilizer system, which will be basically providing ammonia water. And it's a technology-based project based at Versailles, Ohio. And then another project from APCO Infratech, which is around 815 for general civil works. So if you see, prior to that, early part of April, we received some orders which is related to car shed. These are small orders. So we are taking orders of small duration and long duration infrastructure, industrial. Then we are entering into a couple of other new areas like data centers. We also bagged some orders in solar project in the past. We are also doing water pipeline project. So we have a huge portfolio, well-diversified portfolio to balance it out.
So from what I can see is your revenue recognition has picked up in just last couple of quarters. So it might be quite difficult for any investor to gauge what lies ahead. So if you could just give us some understanding of what is the kind of growth or internal targets that you have for FY27, specifically when it comes to the top line and the bottom line.
Okay. These projects, basically of 12,000 crore, we need to execute in next time frame of around 3 to 4 years, within 3 to 4 years period of time. And all are healthy order book. So it will convert to the revenue and the bottom line improvement over the period of time. So as we are already in April, so by the time we get notice to proceed for these orders and the work starts, so from these new orders of 3,000, we may not get major revenue in the current financial year. We might be doing engineering, which will give a small revenue out of this. But out of the 9,000 crore order book, what we already have prior to this, that will definitely improve our both top line, bottom line over a period of time. So we expect to grow in the current year, at least double what we will be closing in the current financial year, and then continue to grow at a pace of 25 to 30% for next couple of years at least.
And margins would remain in the 20% range?
No, I don't think our figures show that kind of margin. If you see, we are making an EBITDA of around 13 to 14%, which is the industry standard. Of course, if some of the technological project will have a better margins, so we will have a mix of such projects, higher margin and normal margin projects. So it should be in a decent range, decent double figure.
Got it. Ajay, with regards to the recent West Asia conflict, a lot of these infra companies as well as real estate companies are getting impacted because of raw material prices going up, plus supply chain disruptions as well. Are you penciling anything of that sort coming in, any kind of hit that you're going to take in FY26 books or going forward in FY27 as well?
Look, we have recently taken an order in Middle East, that is in Ras Al Khaimah Economic Zone. And this is for developing a manufacturing, smart manufacturing hub within that area, which includes 0.9 million square feet of industrial development and around 2.4 million square feet of state-of-the-art commercial office development and the associated infrastructure works. we all know that today is the demand of manufacturing across the world in all countries, including India and other West Asia. So I don't think this is some smaller hit might be there for some time, but it has to again grow at a bigger pace, as this project is basically a plug and play kind of a facility for manufacturing latest technology, manufacturing products like semiconductors, aircraft engines, solar panels, EVT oil. So all these technology based products are the demand of the day, and it will continue.
Okay, your order book currently is at around 12,000 crore rupees. Just wanted to understand, do you have more capacity to take new orders, or your hands are full at this moment?
So we are definitely looking forward to take new orders. We feel that another 7 to 8,000 crore of orders we can book within this financial year. And as far as the capacity to do and execute, we are being supported by our group. Our promoter, Mr. Jahid Vijapura, has been a very long standing for last 70 years in business, and we have a strong financials. So we are also organizing further funds, working capital arrangements to take care of these projects. So we are sure that we will be growing at a decent pace, and we have capacity to take some more orders.
Okay, on some more orders, I just wanted to understand this part as well. Could you just give us some understanding of for how much, what is the total worth of orders for which you have placed bids which are yet to open, and usually what has been the success ratio for GHV Infra?
Look, we are very selectively bidding, as we have sufficient order book as of now. So we are selecting the sectors also where we can do profitable business. Like one of the area we have looked into right now to enter into the data center projects, turnkey execution, which hardly anybody is available who can take care of the turnkey execution. So we have created a structure where we have tied up with a party who can provide support for complete engineering and compliances for these data centers. And then we will be doing a turnkey project. Similarly, we have also developed one port projects execution vertical. So where not much of parties are there. So we are looking forward to enter into those areas also. So we are mostly concentrating a mix of private and the subcontracting of government jobs, which are profitable. So there's enough scope available to take care of these jobs, plus the new sectors what we are looking forward to enter into.
Interesting. Ajay, considering all of this, considering the order book visibility that you have, you planning to follow into data centers as well, any plans of fundraising on the cards, considering that you will be going ahead and executing all of these orders that are already there?
So we are exploring all opportunities for the funding, including all kind of, including Indian funding and for our foreign projects funding. So there are certain products which are not available in India. We are exploring to get funding from outside India. So all those efforts are on, and it's a continuous exercise. And that's where order building and arranging funding are two parallel things which have to run hand in hand. So we are making all our efforts to see that the balance is maintained.
Okay. All right, Ajay, thank you so much for taking up the time and being so candid with all the answers that you gave us. We look forward to speaking to you once again when your numbers are out in Q4. Thank you so much for taking up the time.
Thanks a lot for connecting, and thank you.
All right. So that was the management, of course, that we spoke to of GHV Infra. Significant order wins coming in for this one. But let's also welcome in Gaurang Shah, Senior Vice President at Geojit Investments, joining us now. Gaurang, a very good afternoon to you. Thank you so much for taking up the time. You heard the management, right, Gaurang? I'm sure it's a small company, you might not have coverage, but any view on how all of these infrastructure companies right now are sitting on huge order books, but execution is something that we need to watch out for?
Hi, Mahima. Good afternoon to all your viewers of NDTV Profit, and to you and to Somit. A small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, Mahima, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we share similar investment ideas with our clients. They might have their investment interest. So I think what Ajay was just referring to in terms of two positivities that I could point out in that brief conversation that you were having. One is that no significant impact of this Middle East conflict. That is the positive. And the second positive is that they are venturing into data centers. And data centers normally are, highly complex turnkey projects. And as he was mentioning, there are no peer competitions to, as of now, compete with them. So that's a positive. I don't have any specific coverage on GHV Infra, so I won't give any buy, sell and hold. But on this sector itself, buy and hold, we are positive. We have coverage on 2 companies, or rather 3 if you will, or rather 4 to be very honest. Dilip Buildcon, HG Infra, NCC Limited, and there is a huge large cap company, L&T, which has got diversified businesses and the contribution companies from all the business verticals quite thick. And the order book is also spread across all the 4 or 5 verticals. So I think what happens now, Mahima, is that if we do need to get up to the higher GDP growth rate, there are 2 prominent things that the government at center and at state has to do. That is create new infrastructure. And the second one is modernize the existing infrastructure. So, and in the budget itself, we've heard from the Honorable Finance Minister a decisive budgetary allocation towards this creation of infrastructure and modernized infrastructure. So the sector looks quite positive.
Let's go across to Jasmeet to understand what's been buzzing when it comes to shrimp companies like Avanti Feeds, Apex Frozen, Coastal Corp. All have been gaining on the back of the export data. What is that data suggesting, Jasmeet?
Well, thank you for that. If you look at the overall data, that has turned out to be quite positive for all the companies. The overall export data for FY26 saw an uptick of roughly 14% and reached the 8.43 billion. While mind you all, this uptick has come amid the overall US tariff and the West Asian war. So that's why it's positive sign of the overall industry, and all the stocks based out of seafood and the shrimp business are buzzing in today's trade. Let's quickly understand more details. Well, the export-led shrimp players are the key beneficiary when it comes to the global demand, which has stayed healthy, and for this time they've also noticed US being the largest importer of the overall shrimp and other seafoods. We have also noticed the demand coming in from the non-US region as well, followed by the China. So it creates an overall up move in terms of the other geographies as well. Now, if you look at the key players, Avanti Feed, it's up almost 6%. This is on the back of that strong feed and shrimp export integration. If you look at the overall management commentary, they say the overall UK and EU deal is something that's very positive for the company going ahead, and they see overall demand to increase in those regions as well. Now, something like an Apex Frozen Food, it's up almost 13%, while it has a high exposure to US and majority of its revenue comes from the US geography. And in terms of the management commentary, they see the overall FTA to increase the ready-to-make orders for the particular company going ahead. While they haven't baked in those demands so far, but going ahead, they expect in FY27 the overall demand to pan out for the company. Well, lastly, I have Coastal Corp as well. It's up nearly 7%. While this company focuses on the processed shrimp exports, further the scaling capacity and the value-added products is something that's benefiting the margins for the particular counter. Well, lastly, the key things to watch out will be the overall geopolitical tension which is going on currently, which might impact the shrimp industry, and this is a recovery that they have been seeing over last 1 year. Further, the US consumption trend also depends a lot because the US is the biggest exporter of shrimp from India. Lastly, the currency movement impacts the overall realization, so any change in the currency rates will be in focus. So all in all, we do see a good day for all the marine exporters in terms of seafood and shrimp business.
Gaurang, there are a host of stocks that are actually listed in this space: Apex, Avanti, Coastal Corp. Any one of them you track? Any view on this sector specifically?
So before I comment on that, Sumit, one thing that I would want to highlight, which your colleague would also agree with, is any kind of a shocker statement from President Trump. We all know the flip and flop that he does. So any statement on this particular sector in terms of tariff or any kind of negative comments could play a havoc in this sector, as we've seen in the past when the tariff talk was going on. As a disclosure, and to answer your question, on both these companies, Avanti Feed and Apex Frozen Food, we have a positive coverage. And one positive that I think personally, Sumit, that will emerge as a tailwind positive for the aquaculture sector overall is the FTAs that are signed with various countries. I think India has signed almost about 7 to 8 FTAs. What I'm given to understand as per reports is that on 24th of April, we'll also sign one more FTA with New Zealand, if I'm not mistaken. And these new FTAs would be a huge opportunity for aquaculture companies to export. So we remain positive on Avanti Feeds and Apex Frozen Food. As a disclosure, we have a buy coverage on both.
Okay, all right. So that's the view coming in on all of these marine exporters. But time to slip into a very, very short break. But we'll be right back, getting you more small cap buzzes on the other end, on the other side of the show. So do stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Welcome back. You're watching Small Cap Bazaars on NDTV Profit. Before we go on to our next small cap stock, let's get in Sharat to understand what's been buzzing on the FNO side.
Okay. I think there is some audio issue that we are facing with Sharad's mic. I think we'll get you the FNOQs soon. But I think let's take and talk about our next small cap buzzer. I think Kolte Patil is in focus on the back of its Q4 updates coming in. And I think we have Parth joining by to give us a perspective on how Q4 has panned out for Kolte Patil. Parth, over to you. Okay, I think we'll get Parth in just a minute, but the stock has seen an uptick of almost 11 to 12%, touched an intraday high of 11 to 12% in trade today, and right now trading around 9.2% higher. With regards to how the Q4 business update has come in, I think the stock is reacting on the back of that. If we can try to pull up the charts for the next, for the last 6 months or so, the stock, of course, was under pressure. But Parth, over to you with regards to how Q4 has panned out. Positive, of course, for sure. That's what the stock is reacting to.
Thanks a lot, Mahima. So, Kolte Patil is a real estate company that dominates in the Pune residential market. They also have a presence in the markets of Mumbai and Bangalore as well. In fact, in FY26, Blackstone acquired 40% of the company in a two-phase transaction. Now, the reason why the stock is in focus today is because they have reported their last quarter operational highlights, in which the company saw a very strong performance driven by their new launches. The company's realizations were at record levels due to the increased contribution from markets like Mumbai, and they also reported a record number in quarterly and annual collections as well. If we have a look at the Q4 numbers, then their sales value stood at 714 crores, which was up 18% quarter on quarter and 13% YOY. Their sales volume stood at 7.4 lakh square feet, which was up 7% QOQ and down 7% year on year, while realization stood at 9,601 per square feet, growing at 10% QOQ and 21% YOY. So this is the main reason why the stock has gained over 10% today. In fact, in the last 1 week, the stock is up over 20%. So a really good update from the company, and let's see how it goes for them in the upcoming quarters.
Okay, thank you so much, Parth, for getting us those details. Gaurang, any view on Kolte Patil?
We like the sector, Mahima. Unfortunately, we used to cover Kolte Patil, but our targets were in place, and post that we've not initiated further coverage. But like I mentioned, we are positive on the sector real estate. One small underline for the benefit of your viewers, that if they are able to understand and do diligence, have some study and then decide to invest in real estate related companies, please understand that even after many regulations that have been changed for bringing in discipline in this sector, Mahima, this sector still remains a high beta. In good markets, it will outperform, and in bad markets, it will lead from the front to go down. Having said that, the Indian real estate market looks quite robust. I was reading certain reports over the last weekend. Mumbai, especially in Mumbai, Mahima, the real estate market has shown a tremendous amount of resilience. And the registration for both commercial and residential properties have been elevated compared to other metros. Having said that, positive coverage on DLF, Godrej Properties, Prestige Estates, Shobha Limited and Oberoi Realty.
Well, thank you, Gaurang. Thank you for joining us and giving us your perspectives on the stocks that we discussed today on the show. And before we end the show, let's get in Sharad again to understand what's been buzzing on the F&O side.
Well, largely we have seen sector-specific moves happening, but nevertheless the technicals are showing good support for both BankX and Sensex, and see the green has increased more. Largely a little bit of sell-off in HCL Tech and Sun Pharma, but overall Adani Group of stocks, FMCG stocks all holding the fort properly, and we are expected to go into the next week also with a positive momentum in the trade. Let's look at the stocks key long build-up, what's happening there. And we see Angel One, after its con call, the stock has gone up as well. The stock is up 11%. And from FMCG pack, Colgate is one of the top gainers, is up 6% as well. Let's look at the short covering candidates, what's there in focus. Let's just pull out the short covering. KEI Industries comes as a new entrant since the last time we spoke, around 3% it's up. JSPL also showing good volumes at almost 5% of gains coming in. But let's look at the long unwindings to see if any trade is there. No, it's not there as such. So let's move on to the short build-up to see whether the momentum is happening. Kalyan Jewellers, the jewelry stocks are seeing some kind of a pressure as well. Stock is down 2%, while HDFC Life on the back of its earnings, a little bit of recovery has come in, but nevertheless short positions are still there. So these are the stocks which should be in your radar in the F&O space.
Thank you, Sharad. Thank you for that F&O setup. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the
Hello and welcome. You're watching Ask Profit, the afternoon edition. I'm Mahima Vacharani and with me is Puneet Zaveri. Puneet has been teasing me throughout the day, so I'm mad at him today. But, let's take a quick look as to how the markets are doing right now. The Nifty 50 is trading well above the 24,200 levels. I think the important level to watch right now will be, we've surpassed the 24,300 levels. I think my website is not loading, but 24,300 levels is what we've breached as we speak. Almost at its day's high point for the Nifty 50, 110 points of an uptick is what we're seeing. But the key question will be whether we'll be able to sustain those levels or not by the end of this day, right? So we'll have to wait and watch out for that. But with regards to where the Nifty 50 heat map goes, I think a large chunk of that uptick is coming in from counters from FMCG names. You have HUL, Reliance, doing fairly well. Nestle also up 2%. JSW Steel or Asian Paints are some of the names that are doing fairly well. Wipro continues to be under pressure on the back of the numbers that it gave, down by about almost 3%. HDFC Life also on the back of numbers, down 2%. Sun Pharma, HCL Tech, M&M are some of the other names under pressure. But let's try to pull up the sectoral heat map. That's an interesting one to watch out for today, because after a really long time, we're seeing good gains coming in on FMCG. I mean, just a few days ago, we were talking about how FMCG in the past 3 years has given negative returns. This year also, in fact, year to date, considering today's move, should be down by about 11% still. But we'll have to wait and watch out for whether that reverses this year or not. Nifty ID, the only one in the red, down by about 0.2%. But Nifty Energy, Nifty Media, as well as a lot of your Nifty Realty, Nifty Metal doing fairly well. Let's pull up the advanced decline ratio. That's an interesting one because both the mid cap 150 and the small cap 250 are also almost trading at its day's high point, and you have around 1900 odd advances versus that of 600 odd decline. So more than that 3:1 ratio is what we are seeing on in the favor of the bulls. But Puneet, with regards to where the broader markets go, I think a lot of the action is coming in from the news flow, the earnings, etc.
Most certainly, and 24,300, it's a key positive and a lot more positive at this point of time for the mid cap 152. Now across the 22,000 mark, up 1.4% for the small cap 250, and the BSE 500 also reflects that momentum across a bunch of stocks today. So in the gainers, you see VST Industries. You saw that while the hike has been happened on the cigarettes on January 1st, quarter 4 volumes are expected to be strong, and VST results does show that. So that should augur well for Godfrey Phillips as well as ITC. Angel One on the back of results is up 10%. So is MMTC, Ircon, Gujarat Gas as well as Aegis Logistics. And while on the declines, not too pronounced compared to the gains, so we'll take it at this point of time. The BSE 500 up 271 points. But let me welcome in Ruchit Jain, the Vice President of Equity Technical Research at Motilal Oswal Financial Services, and Chakri Ropia joining us, CIO of course at LGT Wealth, joining us as well. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first query right away from Ekam Barai, who's a regular viewer. He has a question on NSDL. He's been holding the shares at roughly around 2023 and asking what he should do with this counter now. What would you recommend here? We'll correct the buying price on the screen right now, but what's your view here, Chakri? It's been one stock after listing and after those gains has slightly cooled off. What would be your recommendation?
For a trade maybe, but as an investment, it's, as a platform, it's kind of the margins are going down. So this as a business, I think, will earn lower than expected return. So I wouldn't really hold on to it.
Okay, all right. So that's the view coming in on NSDL. The next question that we have is coming in from Ekambara, I think.
No, we got that
okay,
one.
we got that one. Okay, the next one is from Siju, who's writing us from Qatar, asking about FMCG stocks and saying that he would like to add one counter in his portfolio considering the high growth potential. He's a long-term investor. He's looking at 3 to 5 years point of view. Ruchit, no, since this is 3 to 5, Chakri, I'll stick with you for this one. FMCG names, any of these names that you're liking for seeing an uptick in trade today, but considering the tailwinds that are already there with regards to your monsoons coming in, with raw material prices going up, etc., this year is still a question mark for this sector.
Yes, it is, and the stocks have underperformed. Companies like Dabur have lost far more because of partly related to the war, the Middle Eastern sales. Hindustan Lever is also down. So, from that perspective, these are worth it. If you're a fairly long-term investor, I would buy into a Dabur, I would buy into a Hindustan Unilever.
Interesting one, Hindustan Unilever, Chakri, because stocks been largely underperforming, right? Over the last 5 years or so, we've also seen that there's not too much on the ground. What's making you positive about HUL at this point of time? And it's just likely the time correction over years that we've seen now?
You're right, and the stock has not done well over the last 5 years. Now they have a new CEO. Now they want to expand into more higher margin products than they were in the last 5 years. So while the verdict is still out, whether they will actually be able to achieve, but their goals of moving towards higher margin should help the stock price, especially given it's underperformed.
Got that view, Chakri. But the next question coming in now from Soumya from Bangalore. She holds 100 shares of BEL at 456 and asking a short-term view. Now, it's largely known, Ruchit, that fundamentally very strong counter, and we're starting to see those second leg of rally on the defense stocks. Is BEL one of them on the charts for you?
Yeah, overall trend seems to be positive for BEL. Post the recent correction, the stock formed a support base around 400 levels and again has resumed its broader uptrend. From a near-term perspective, I think 475, 480 can be expected in next few trading sessions. So one can continue to hold with the existing long positions.
Okay, we've got our first caller for this show. Chandrasekhar, I think, is calling us from Bengaluru. A very good afternoon to you, Chandrasekhar. What's your query about?
Yeah, good afternoon, madam. Actually, I purchased Amar Raja batteries at the price of 996. So should I add more or to average, or what should I do?
What is the time horizon that you're looking at?
Long term.
Long term. Okay. Chakri, I'll come to you on this one. Amara Raja, any view?
Amar Raja is one of the leaders in batteries along with Excite. But however, with the new storage requirements, or rather batteries storage requirement going up and lithium ion going to come up, Amar Raja, while is also expanding in that, it's in a separate, another subsidiary company. So Amar Raja, I would not really hold on to it given the shift that's happening in the battery industry.
Got that view, and we've seen a lot of renewable players also come out with BESS products. So that kind of advantage that was expected for the battery makers might not actually be there at this point of time. But lithium ion definitely an opportunity to look forward to, but backdated, as Chakri also pointed out. The next question coming in on MRF, our viewer V Mulli from Bangalore, who is a regular viewer, of course, holds shares at 1,39,023. Now, Ruchit, he's holding 3 shares and asking if 8 to 10% kind of a return profile could be the expectation over the next 6 months. Is that something that's reasonable? What would you recommend?
So possible pullback move towards 148, 147,000, 148,000 can be expected. So as of now, can hold the existing long positions, maybe around 147, 148. If it comes, one can take a review again.
Okay, all right. So that's the view coming in on MRF. The next one that we have is on Tata Elxsi. Venkat from Hyderabad is bought at the price of 7,400. He's got 44 shares in his portfolio. He's sitting on a loss right now, but wants to know the targets on this one. Ruchit, I'll stick with you for this. Your view on Tata Elxsi, because he's sitting on a significant amount of loss.
So I think the IT space overall has not done that well. But last few weeks, we have seen some pullback move in many of the IT names. The mid-cap IT witnessed a good volumes in last couple of trading sessions. So in case if this momentum continues, and one can expect levels around 4,850 to 4,900 immediately, which needs to get surpassed for any further trended move towards 5,300 levels. So 4,900, 4,950 would be the first level that one should watch out for as a resistance. If it gets surpassed, then can expect 5,300 down the charts.
5,300 could be something expected as Rohit recommends on Tata Elxsi, but a hold for now. The next question coming in on Marico Asta from Delhi actually is holding shares at 730, asking if she should sell right now actually. Chakri, it's been one of the FMCG counters that actually has done well despite the volatility seen in copra prices and has held ground, especially with their digital strategy. Would you recommend selling right now or continue to hold? Because it has been in this range bound level for a while now, but has corrected from almost 850 to 900 rupees.
Indeed, the stock has corrected, and for well-known reasons like you mentioned about copra prices. But I think that's now kind of it's in the stock price now. So going forward, I think the prices would, as there's a raw material improvement, margins improve, worth holding on to Marico at current levels.
Okay, all right. So that's the view coming in on Marico. We've got our next caller. Kaizad is calling us from Mumbai. A very good afternoon to you. What's your query about?
Hi, very good afternoon to you as well. So I have bought Maharashtra Bank at the rate of 58 rupees, and I would like to hold it for a long term. So I'm looking at a view of 5 years plus. Is it worth holding for 5 years plus?
Okay, got your question, Kaizad. I'll take this up with Chakri. Chakri, he's bought at the levels of 58. The stock is currently at 72. Do you think he can continue to hold this for the next 5 years?
The stock is well placed. It's reasonable valuation. It's a balance sheet has fairly cleaned up. It's fairly strong, and it's a kind of a more regional player. And so I think over the longer term, the stock will definitely kind of do well. So worth holding on to.
Worth holding on to for Bank of Maharashtra from Chakri. But next question coming in now on Policy Bazaar. Actually, it's a stock we haven't discussed for a while. Let's look at the chart for today as well as for the last 1 year. Has been a volatile counter there, PB Fintech. And Shobha from Bangalore actually holds shares at 1,720. Now, Ruchit, stocks trading at almost 1,580 odd levels, but look at the 1 year chart too, very quickly. Has been in a similar space, right? Very, very volatile, just almost down 4% for the year. Any view now on this counter?
I think most of the price wise as well as time correction has been seen in the stock. The prices have corrected from that high of around 1960, 1970 to 1400. And last one and a half month, the consolidation has been there in which 1400 has been acting as a good support base. So till this support level is intact, I think downside seems to be limited from here on. So these are not the levels where one should think of booking losses. But keep a stop loss below 1400 and continue to hold on for a pullback move. Initial hurdle is its 200 EMA, which is at 1650. Once 1650 is surpassed, then can expect levels around 1750 to 1800.
Okay, all right. So that's the view coming in on PB Fintech. The next one that is coming in from Sunita, who's writing us from Hyderabad, asking about Bikram Solar. She's bought at the levels of 358. 100 shares is what she's holding. Sitting on some losses right now. Wants to know if this is the right time to average. Chakri, would you recommend that?
Renewables as a space is good. Bikram Solar is well positioned, and I think this company is the fundamentals are improving, and given the industry outlook is improving, definitely worth potentially adding on to these stocks at current levels.
Oh, got it. The next question now coming in, it's from a viewer who wants to know a couple of key stocks that he can invest in. This is Gauri Shankar, who is asking us this question. Now, Ruchit, a couple of stocks she's asking she can invest for the next 3 months. What would any of those spaces right now that seem interesting after the last couple of days, the up move that we've seen, what's on the radar?
So broader markets have been doing well. So a clear relative outperformance from mid and small cap space is there. So we like Azad Engineering, where about 9 to 10 months of consolidation phase breakout has been seen in this week. That too supported by very good volume. So from a next 2 to 3 months perspective, we expect the stock to head higher, maybe towards 2100 kind of level. So one can go long on Azad Engineering over here. DMart is another stock where overall structure seems positive. Post a recent up move, the stock went into a consolidation phase. Now again, a resumption of the uptrend has been seen. So, DMart and Azad Engineering, these are two stocks where we expect good momentum over the next 2 to 3 months and hence can be bought at current levels.
Okay, all right. The next one is coming in from Murli, who's writing us from Kerala, asking about REC. He's got already 700 shares at an average price of 270. Wants to know whether he can book profits from a current market perspective, or should he continue to hold from a long-term perspective. Chakri, considering that this is eventually going to get merged into PFC, would you recommend him to continue to hold this, or would you recommend him to, probably sell this and buy PFC?
I would tend towards the latter of buying PFC because both are in a similar space. They are financing, both renewable and thermal, and the valuations of both are kind of very reasonable. So I would rather buy PFC rather than REC.
PFC rather than REC at this point in time is what Chakri prefers, but go across, take the next question on Power Grid. Our viewers holding 150 shares, bought at 294. Now this is Suchita asking if she should hold on or sell out. She's not mentioned the time frame, but Ruchit, would you recommend that? She is of course in the gains. Should she book out?
No, I would recommend to continue to hold on. The overall trend seems positive. The stock, in fact, have recently given a breakout from a consolidation phase. Targets, even if it's a short-term move, then can expect around 333. So at current levels, hold on around 333. If the stock comes, just take a review again over there.
All right. The next one that we have is coming in on Kalyan Jewellers. This is from Lata, who's writing in. She's bought it at the levels of 402. Wants to know whether she should buy more or sell from a 2 years perspective. Chakri, the idea is that there is talks going on around that there's a new DGFT personnel that has come in, and that's why gold that is being imported, the consignments have not moved since 2nd of April, and that's why probably gold counters are not doing very well today. But your overall view on Kalyan Jewellers right now from a long-term perspective?
I think the current, whatever you're seeing restrictions are clearly only a temporary in nature. And Kalyan Jewellers, the stock has corrected fairly significantly. The valuations today are far more attractive than they were before. And as a space, gold jewelry continues to be attractive. It is an area where it's not just as a consumer discretionary, but as a consumer discretionary plus savings. So as an investment, so worth holding on to Kalyan Jewellers.
Coromandel International, also the next one very quickly to focus on. Now, Ruchit, our viewer has actually bought it, I think very recently, 2048 he's bought it. Stocks trading at a very similar level also, holding 148 shares. Now, how are you viewing this counter, Ruchit? Because, year to date also stocks down almost 10% but recovered from the lows. What would be your opinion now?
Broader trend still seems sideways only. 2200, 2220 is immediate resistance, and on the low side, 1850 is the support. So the volumes are not that high in the recent past. So I think even if you look at the entire sector, you have not seen that kind of positive momentum along with the broader market's participation. So I think now maybe keep a stop loss below 1850, but do not average out or do not buy more positions here.
Okay. All right. So that's the view coming in on Coromandel. The next one that we have is from Happy Mohanty, who's writing us from Bhubnesh, who are asking about Sumitomo Chemical. He wants your view on this, Ruchit. From chart's point of view, is this the right time to make an entry into this one? From a slightly long-term frame, he's looking at this counter.
Yes, can be bought. I think worst phase is done for the stock after this recent correction from high of 660 to the low of 350, 360. But buy in a staggered manner, because last few days already the stock has seen an up move. Support is around 410, 400 kind of range. So you can buy some quantity at current levels, and in case if you get a dip towards that support, then look to add more at lower levels.
Sriram from Vishakhapatnam actually has this very interesting question on ITC hotels. He bought shares at 206 and he bought 2,000 of them. So he's currently sitting on a loss. He wants to know what is the future, if there are any good dividends that could be declared, and a view for 5 years. Now, Chakri, this move actually has been quite puzzling, right? Everybody thought that the bottom would be 200, but then stock has now comfortably been at this 160 odd level. Is it still a buy from you at this point of time? And could it be that for the next 5 years could be, because the company has a very long growth trajectory till 2030 in terms of addition also of room keys. What's your preference?
Currently many of the hotel stocks, including ITC hotels, have corrected because of the war and the fear of that slowdown and occupancies as a result of lower travel. So other than that, the long-term perspective of the company is very strong, and they have a fairly good key addition program over the next 2, 3, 4 years. So worth holding on to.
Okay, all right. So that's if coming in on ITC hotels. But let's quickly shift our focus to a major development on gold imports. DGFT has issued a notification after 7 banks have reported blocking of gold being imported. To get more details on this, let's cut across to my colleague Rishabh Bhatnagar, who has all the details. Rishabh?
Right, so it was reported today morning that a lot of banks are facing issues with gold and silver imports, and there seem to have been a lot of imports shipments that were stranded at various ports awaiting some sort of an authorization from the Director General of Foreign Trade. And what we have now that has come in is a notification of the 18 or 17 banks that are authorized to actually import gold and silver. So what had happened was that today or maybe yesterday you had about 2 large banks that had made a plea to the RBI to help them with this matter, given the fact that there's a lot of demand that is met purely through gold and silver imports. India is a major consumer and also an importer of these precious metals. So that was continuously stuck. For banks, this is sort of a hedge also to the uncertainty that is grappling that they're grappling with. So what we're picking up is that starting March 31st, banks were unable to import any sort of these precious metals, and today's about 17 days went by without this notification coming in, and a lot of shipments were stuck because of this. But finally, some sort of a clarification has come. The reason for this delay by this DGFT is not out yet, and that is something that we are probing as to why this has happened, because this has not happened in the past as well. Over the so many years, it has never happened that when a FY is ending, the authorization, the advance authorization list hasn't come. So we're probing why this delay has come in.
Okay, all right. Rishabh, thank you so much for getting us those details. In fact, that has ripple effects on all of these gold counters. Kalyan Jewellers, for example, is seeing a downtick on the back of this news coming in. But viewers, it's time for a rapid fire round. Ruchit as well as Chakri, you both know the drill. Try to keep your answers as short as possible. The first one is on Wipro. Rohini from Bengaluru is holding 1,000 shares at the levels of 209. Currently on a loss of over 4,000 rupees. Hold or sell from a 3 to 6 months point of view, Ruchit?
It has been underperformance to exit.
Tilak Nagar Industries bought at 495, Ruchit. Should Venkatesh continue to hold for the next 6 months?
Yes, hold for an up move towards 500.
Okay, Persistent System 250 shares bought at the levels of 6150. Hold or sell, Chakri?
Persistence, I would sell because the fundamentals are still very weak, not yet firming up.
On Suzlon, Ruchit bought at 49.84 by our viewer Surendra. He's asking if he should continue to hold or sell out right now.
Hold and review around 60 rupees.
60.
NTPC Green 1,000 shares bought at the levels of 98. From a short-term perspective, what's the target, Ruchit?
On the high side, the stock can see an up move towards 115.
Pamanji from Andhra Pradesh has bought into Paradeep Phosphate, Chakri, roughly at 124. Now asking if it's a good long-term bet for the next 3 to 5 years.
Very good long-term bet. It will recover from the current uncertainties and worth holding on to.
HDFC bought at the levels of 768. Buy more at the current rate, Ruchit? Short-term view?
Hold existing positions, not recommending to add more.
Jamna Auto bought at 125, Ruchit, by Prashant, and he's holding a massive 16,000 shares. Now he's asking a short-term view, so could be a trading bet. Any view here on the charts?
Keep stop loss below 120 and expect up move to 144.
United Spirits bought at the levels of 1378. Sell, hold or average from a long-term view, Chakri?
Clearly, average and buy some more because, as a space it will do well.
KPI Green bought at 592 by Gopinath, who asking what he should do with his 200 shares. Ruchit, very disputed and volatile stock, right? Any view here?
So hold for up move towards 500. Just review again over there.
Got it. Well, That is the end of the rapid fire as well as this edition of Fast Profit. Chakri as well as Ruchit, appreciate your time as well as your inputs today on the show. But viewers, all the time on this edition of Fast Profit, the afternoon edition. Stay tuned. India Market Close comes up next.
GHV Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters.
Good evening. You're watching India Market Close, and markets are as green as my suit today, I suppose. 0.5% up on the Nifty and decent recovery for the day, I would say. I mean, this is if this is a marathon, the markets are in the mid mode, kind of. Now pacing themselves, not really sprinting along after the first head start we got a few days ago.
100% on the benchmark, but I think if anything, the action, just like it was yesterday, is in the broader markets, and the broader markets looking very, very good. Let me move away from this number. Actually, it was on the screen. Pull up that previous number, that screen, right? Because that's where the action is. We'll get to that graph in just a bit. Take a look at the advance and decline ratio, and look at the number, nearly 1900 or over 1900. Now let's pull up the mid-cap index, and we're trading very close to the high point of the day, up over 1%. In fact, we're heading that lift off in the last part of the session today. And pull up the small cap index as well, and you will see gains of 1.4%. So considerable strength in the broader market.
1:3 advanced decline ratio. This is a mode where now markets are beginning to get over the sort of PTSD of the war, at least for now, and figure out what to buy. So what they're buying becomes very important. Also crucial that we're above the 24,300 mark quite convincingly on the Nifty. We need to stay here and close here. So we'll have to see what the next 1 hour looks like. It'll be quite crucial. Let's pull up the Nifty heat map for you and just give you a sense of what's happening there, what's moving, what's not. I mean, the comeback of FMCG has been astonishing through the day. No real very in-your-face trigger for it, I must say, but an HUL moving 5%
Earnings, no?
randomly. But where have...
Bajaj Consumer, for example, is giving you a sense that it might actually be a good picture. People might be extrapolating.
For HUL to move 5% on a Bajaj Consumer
People might be extrapolating.
Yeah, is a bit of, maybe a bit of a stretch. That could be, very well could be one of those reasons. I mean, who's to tell? But HUL moving 5% up is exciting. So is Nestle, an Apollo Hospital doing fine. Max Health, so some of those plays as well coming in. JSW Steel looking good. I mean, what's sulking are the two companies whose results are being punished by the street. Wipro and HDFC Life, HCL Tech and Infosys along for the ride with the beating that the Indian IT sector is getting and the question marks there. And some of the auto pack is weak, but definitely off its lows of the day. I want to pull up Nifty contributors just for a second to see how the heavyweights are doing, because remember, entirely in focus is going to be the banking pack, and we'll show you the Bank Nifty and the constituents of the Bank Nifty as well. RIL, HUL, rare to see them in the top post of pulling up the markets. HDFC Bank ahead of results, looking good. On the downside is Infosys and ICICI Bank. I thought this was interesting because remember, right now it's all about the numbers. The constituents of the Bank Nifty should be pulled up very quickly before we get to the broader markets and other perspectives. ICICI Bank is the only one in the red, but mildly so. And Federal Bank, Kotak Mahindra Bank, all of them up in the green today. Yeah, absolutely. I do want to look at the broader markets because you seeing a few instances of stocks reacting to earnings. No, I want to talk about individual stocks. So pull up the constituents perhaps of the 500 of the big movers, right? So you have GSPL that's doing particularly well in trade today, VST reacting to numbers. Angel One, we talked about this in the morning, and it is reacting to a pretty solid quarter, particularly when things were not looking great for the industry as a whole. Markets haven't done too much in that quarter, remember that, and they have had a resilient quarter. What else? Gujarat Gas has had a few positive notes come through as well, and even beyond this, actually beyond the 500, there are a few stocks like, for example, Waaree Renewables doing particularly well on the back of results. On the downside, of course, Wipro stands out, but Kalyan Jewellers, there is a little bit of a question mark about gold imports that is playing a part. We have a clarification on that, but losing a little bit of steam there. But Spark, HDFC Life, a few of those others we've already spoken about. There's a large amount of gold and silver which is stuck in ports as this authority notifications have not come out yet. That's going to put pressure in terms of the stock that is available in the country. One sense of it is the government wants its current account deficit numbers to also look decent, right? So pairing in the gold imports makes sense. Kalyan Jewellers, Titan, both of them will be seeing a bit of a downtick because of it. But what else is happening? The Nifty is gaining in trade, but overall volumes are muted. In terms of market turnover, cash is down 5% and F&O down 1%, at least till 2 p.m. compared to yesterday. So I would say flat more than muted. Nifty is now up nearly 2,000 points from the March lows. So that's something to be said for that extent of recovery. For the Nifty, 24,400 is the immediate ceiling. If the Nifty clears this on a closing basis, we could see a rapid move towards 24,700 to 24,800. Value buying continues in small and mid-cap names. The Nifty Small and Mid-Cap 100 Index are already up 13 to 15% in March, outperforming the benchmark. bank earnings is what you need to watch out over the weekend. Resistance levels for the bank Nifty, 56,500 and 57,000. Could see a significant supply of rallies here. Supports at 55,900. Kunal Shah with us this afternoon. So is Avinash Gorakshakar. Welcome to both of you. Kunal, I'm going to start with you. Are we going to go into the weekend with a proper Friday mood this time? After a long time, I would say.
Yeah, I think definitely we are going to go with a proper mood. But I think overall what we see in the markets going forward that for Nifty, 24,400, which has been the immediate hurdle. Once that is taken out on the upside, you can expect 24,700, 750 zone, which is the 61.8% retracement of the entire fall what we had. So we're expecting Nifty to move higher on the upside. For Bank Nifty, again, we have the two big boys coming out with results. So again, no fresh trade to be taken at the current levels, overnight positions. But I think overall Bank Nifty also has a gap to fill around 57,600, 700 marks. So it will fill that gap as well. So again, Bank Nifty also from a short-term perspective remains positive. But I think, yes, we are still left for the up move on the upside for Nifty 24,700 and for Bank Nifty somewhere around 57,500, 57,700. So.
Let's talk about individual stocks. And Nifty Bank, by the way, a high point of the day, so too certain other sectors as well. But let's talk about individual stocks and what stands out on the charts today, Kunal, heading into trade. And by the way, Avinash also joining us on this leg of the show. Avinash, good afternoon to you. We'll come to you in just a bit. Kunal, what individual counters look good?
Okay, I think I'll go sector-wise first. So first, again, the power index continues to remain strong and we expect this outperformance to continue on the upside. So your power grid, again, it had already given us a breakout and now there's a follow-up move that is kicking. So that's a buy for me with a stop loss of 310, looking for targets of 326 to 330 on the upside. So that is my first pick over here on the buy side. Second, again, the FMCG space that has started to pick up. So there, the momentum has started to catch up over here. Godrej Consumer, that is looking strong on the charts as well. So again, this could continue the move on the upside, has surpassed its 50 days exponential moving average as well in today's trading session. So that's a buy for me. 1,070 should be a stop loss on the downside, and upside you can expect at least targets of 1140 to 1150 on the high.
Got it. Okay. Avinash, so what we've seen in the recent past is that there is a little bit of resilience that has come through. And and we'll come to earnings specifically in just a bit, but the broad trend seems to be that a bottom may just have been found. And I hope that I'm not jinxing this, but having said that, what would your advice be broadly if you're building out a long-term portfolio?
Yeah, good afternoon, Alex. I think good to see you after a long time. See, my sense is that markets have cheered the sentiment largely because Donald Trump's narrative has changed. You know, it's very difficult to know how his mind works, but I think as of now, it seems that he wants a solution. The war is unlikely to continue for a long time, and that's the bigger kind of bottom line and the narrative which the market have liked. I think clearly, I think crude oil prices still remain elevated, so there would be some cost pressure in the April to June quarter. But I think the markets are happy to know that, normalcy, if it does come in, hopefully in the next 2-3 weeks, some solution is worked out. I think that would be the near-term trigger point. As my other colleague has said, 24,400. I think, the markets would rally significantly because now the markets have rallied up till now. There is some resistance now. The markets would look at more clarity. So I think, it's better to wait and watch. But the best part is that the Q4 numbers which have come out broadly from the corporates which have announced the results up till now, Alex, most of them have been better than expectations. So I think, the markets are cheering that numbers have been slightly better than what the street expected. And I think the growth commentary from many large corporates has also been very good. So, the markets are keeping their fingers crossed. I think the only caveat, Alex, is that this time the monsoon department, IMD, has given a forecast that this time the monsoons may not be great. It may be below normal. And that could be a kind of a problem for, especially the agri, the FMCG sectors. So I think net, I think, we've got to be stock specific. I think we've got to focus on sectors which are slightly insulated. But net, I think it's a good feeling that, this week should be a positive week because I think markets are up. So everybody is happy.
Okay. Now, Avinash, just on the point of FMCG, Because FMCG is up and about today despite this monsoon forecast that you're talking about. What do you think is the big driver there? Are you finding the move exciting and sustainable?
Yeah, I think clearly Q4, Tamanna, will be good. I think volume growth is going to be slightly mid-teens to double digits. And I think the markets are quite upbeat that despite a below average monsoon, maybe rural demand may not be that badly impacted. But I think we need to see how rural demand picks up. My sense is, companies like Hindustan Lever, Dabur, Marico, they've got a very large geographical, kind of customer base. So maybe they might not be that badly impacted. But we like to see the intensity and the impact of the monsoon. Possibly after the June quarter, things could be a little more clear. So my sense is, yes, I think fourth quarter would be good. Management commentary would be very crucial. They are going to sound a little bit cautious now. But I think April to June quarter, and after that, I think how the monsoon behaves is something which is going to drive valuations in the FMCG sector. So we remain constructively positive here, but we would prefer the large cap companies initially, as we believe they have got better, kind of tenacity to face this kind of short-term kind of headwind.
Is there, Avinash, in the FMCG pack?
Yeah, what is it?
What are your favorites in the FMCG pack?
I think we would like companies like Godrej Consumer, a Dabur or a Marico. I think, these are very defensive bets, Tamanna. And I think, the commentary in the Q3 numbers also was pretty encouraging. So I think we'll like to, look at these numbers once they come out. But I think net volume growth plus good price increases in the fourth quarter is going to keep a steady margin kind of improvement for them. So obviously what they talk about post the March numbers is something which is very crucial.
Kunal, what about you? What are your favorites on FMCG and how are you looking at HUL after the kind of move we've seen?
Yeah, I think definitely if I look at the Nifty FMCG index as well, the correction what we had seen from the top, I think we can expect a good move on the upside, at least towards 52,000 on the upside for the index perspective. And Hindustan Unilever, again, on the chart looks great. We have already seen a fresh breakout in today's trading session with volumes. Again, the support has been taken at the 20-day, and then we have broken the 50-day exponential as well. So now we are heading higher toward 2340 on the upside. So even the short-term view continues to remain positive. Expect HUL to go toward 2330, 2340 on the upside.
Okay. All right. Let's talk about the stock of the day. And the stock of the day is undoubtedly Angel One. The numbers were good. And then the commentary from the company has also added to the kind of excitement on the street for this particular company. 10% up and running. Sharad Dubey joining in to tell us what has worked for Angel One. Sharad, especially what was it in the management commentary that has really excited the street?
Well, they have stated that the numbers for the month of April are going to be strong, and large part of expenses for the IPL has not been capitalized or expensed in the March quarter itself. But apart from that, even the broking houses have been bullish in this counter, and the key reasons for the rally is, of course, the better than expected Q4 numbers coming in. The realizations front, that was good. Brokerages turned bullish, and the management commentary, which was there in the middle of the day, that's where the management commentary came, and we saw a spike in the stock. Looking at the bullish momentum in the capital market theme stocks already, which is there, and that's what is giving a good momentum to the stock. But what was there aiding the rally? Of course, more than 30% of up move already we have seen in the month of April. But the con call is very much important. They have stated that April is expected to see a strong recovery in the cash market share segment. Of course, the new businesses, they may create a drag of 2.5 to 3% on the EBITDA margin front. But apart from that, the commentary has been bullish, especially on the broking distribution margin. They are expected to exceed 45% in terms of contribution post FY28. So that is a bullish statement coming from management. Companies focusing on market share gains and a higher average revenue per clients in FY27. So that is where the company's strategy is moving towards, and the margin expansion will be there as a result of efficiencies rising from AI as well. It's the first time a broking company has come out with a statement like that on the benefits of AI, and the less expense was booked in the month of March because IPL started actually quite late. And of course, we will be also focusing on the valuations, because interestingly, the valuations are not as high as compared to peers. Grow is having a valuation of currently at 42 times. If you have a look, the 12-month forward numbers I'm talking about, and Angel One currently is at 22 times only as compared to its 5-year peak of 28 times. And on the other hand, Motilal Oswal, that's slight cheaper, coming in at 14 times. So there might be some more headway also in terms of a valuation catch-up when it comes to Angel One. But in today's trade, Angel One definitely is flying high on its wings.
Angel One has got wind beneath its wings. I was thinking of all of the references that we can make to Angel One, and this is one that comes to mind.
This is certainly one of them.
Certainly one of them. We'll think of more along with the show. But the fact that capital markets are up and about is interesting, especially in the context of what Ramdev Agarwal told us yesterday on NDTV Profit in our town hall. He's, of course, chairman and co-founder at MOFSL. And he talked about how capital markets and the fears around them because of the war and the way markets have behaved are unfounded.
People have done well, exchanges have done well, BSE has done well. BSE, for your information, for last 6 years, the fastest growing company. It has grown double every year. Double every year, you imagine. From 9-10,000 crores, it is up to more than 1,10,000 crores or something.
And you're going to have...
And we're just watching like that.
But scarcity premium will go when you have another player which will list.
The game is going to become so much bigger. They're going to mint money. It's all free cash flow machine. All 140 crore Janta are going to trade only in these two exchanges.
You think there'll be a time when 140 crore Janta will trade? Because
right now we have a demat accounts of about 220 million. In 2020 we were 40 million. Now we are 225 million. I think we are going to be 500 million demat accounts in next 5 to 6, 7 years. Will be the more I can bet will be the most crowded retail market in the world, capital market in the world.
All right. Looking at the kind of penetration that you currently have as a percentage of the overall population, then that is something that is not necessarily out of the realm of expectations. I want to come across to you, Avinash, on the fundamentals though. Angel One results today, and just in today's session, you're talking about a close to 10% rise, 22 times forward though at this juncture. What's the view? Can it still be bought?
I think, Angel One is one of the larger online brokers, Alex, and I think has got a very well-oiled, system to ensure that it gets a large share of this online market. And online business has been increasing very rapidly in the broking, industry. And they were one of the first to identify this trend. So obviously, as a leader, it gets the benefit. My sense is, yes, I think the runway is very huge, but looking at, the kind of, the rise which we have seen today, 10%, maybe one should, look at buying the stock on some cool off. Definitely over the next 2 years, we are quite positive on the company, considering the kind of amount of investments they have made in technology and the kind of ramp up expected in the online opportunity. My guess is that even other companies like Grow could also do better. In fact, Grow is also one of those companies which have risen largely on the online market kind of opportunity. Indian capital markets present a very strong opportunity, but I think at these levels maybe the valuations seem to be little fair to expensive. I would believe maybe it cools off a little. I think that would be a good time to accumulate it and add it in your portfolio.
All right. Now, important results coming out over the weekend, HDFC Bank, ICICI Bank, and let's go across now to Shivam to find out what is likely and what is expected. Shivam?
20% of the Nifty will post their Q4 earnings tomorrow, and starting off with the HDFC Bank, the net interest margin is expected to improve as there will be a reduction in cost of funds, and also the CASA growth will be better. As if we talk about the asset quality, it is expected to stay stable and credit cost will remain contained. One more point that we need to be consider is the commentary on the loan to deposit ratio, as it is expected that the loan to deposit ratio will increase in the upcoming periods. Moving on to the ICICI Bank, the loan growth remains healthy and the net interest margin are going to stay stable. Operating expenses are going to moderate a bit with asset quality remaining stable and credit cost at a lower levels.
Okay, thank you for that, Shivam. We have Aditya Shah now joining in. He's founder of Hercules Advisors to talk about what he is looking out for. There's ICICI Bank, HDFC Bank, and of course Yes Bank that will also report on Saturday. Aditya, what is top of mind for you on what to look out for? And let me start with ICICI Bank, because in HDFC Bank, I'm sure in the press conference there will be more questions about what's happened internally with the management, perhaps, than the numbers.
Good afternoon. I think ICICI Bank will report a steady set of numbers. The loan growth will be at about 10 to 15%. Similarly, will be the deposit growth, and also the asset quality will be largely contained. I will not be surprised if steady set of numbers come in, and ICICI Bank will continue to lead the market per se. As you said on HDFC Bank, there are the business side is one part of the story. The management side, the 81 bond crackdown, and what really happened, and did the forensic audit turn out and give up any results? Those are the key questions that will be seen in the HDFC Bank.
But specifically on ICICI Bank, Aditya, the interpretation based on the system-wide credit growth is that there's a possibility that ICICI Bank has done better than its previous trajectory. And some part of that could be on its credit card book. So if you were to look at the kind of growth that you would be penciling in, what would surprise you on the upside?
I don't think on the what would surprise me would not be the loan growth, would be the asset quality. If there's a market improvement in the asset quality, that is where the real delta for the stock price is. Mind you, the bank can embark on a fast loan growth, but if the asset quality is not really good, that's a major problem. The major turnaround in the ICICI Bank stock over the last 2 years has been on the asset quality side. ICICI Bank has never outperformed the market in terms of loan growth, and I expect them not to do so, because asset quality has to remain intact. Asset quality must improve from here on for the market to give any further re-rating to the stock.
What is the one bit of commentary that you think is crucial from the bank management, Aditya?
As this war goes on, we've been hearing that a lot of small and medium enterprises are starting to face problems. If the bank comes and reports that they are seeing some stress there, it could automatically mean some bit of NPA. So as always, I'm always concerned with the asset quality guidance that the management wants to give. That would be the most important criteria. And also, what is the succession planning? We've seen really poor succession planning on the HDFC Bank management, where it seems to be one of the disputes why the chairman really left. So succession planning, given Sandeep Bakshi's tenure is not for too long, that is one of the more important points that I would see in ICICI.
Aditya, just a quick point. Since you raised the issue of asset quality, the base case is that both will have a good, solid asset quality and credit costs will be low, right?
Absolutely. Both of these banks have a diversified book, and because they have a diversified book, asset quality will be contained. But I am looking for an improvement in asset quality. Also, I am looking at a guidance as to what happens in the Q1 of next year, because even though the war may be over, a lot of SMEs are really struggling with force majeure and a lot of cut in order books. So those are the guidances that I'm looking for with respect to asset quality.
Aditya, do you have a pecking order in mind pre-results? Of course, we'll ask you post-results as well.
So my pecking order would be HDFC Bank and then ICICI Bank. Given whatever has happened in HDFC Bank, I do think that the valuations have derated over the last 3 to 4 years to a large extent, and a lot of negatives are priced in. Whatever happened is one part of the story, but the bank itself is really very strong. I don't think there is something to worry about per se on the bank. So the pecking order would be HDFC Bank, ICICI Bank and SBI put together.
Okay. All right. Thanks so much for joining us this afternoon. And of course, we'll touch base with you once the results come through as well. Let's head across now. It is that time of the show where we head across to Somit Sarkar to find out what the chatter on the dealing room is. And in Heard on the Street, that's what it's called, of course. And Somit, good afternoon to you. What's the word?
Well, a host of stocks again that dealers have highlighted given the fact that it's a good day of trade. But again, do remember that the dealers are keeping their positions light given the fact that it's a weekend and they don't want to carry much positions on either side of the trade. A few stocks, however, what they have highlighted is HCL Tech and Persistent Systems firstly. What deals are indicating is that there are sell flows on institutional desk for both the IT names specifically, and this is largely because the Q4 numbers are expected to be on the weaker side for both the names, and hence these sell flows coming in. For Kotak Mahindra Bank, the stock was under pressure for quite a while, but now dealers are indicating that again, buy flows have started on the institutional desk for this name, that is Kotak Mahindra Bank, and the selling is largely over. So the stock could bounce from the current levels. For PFC and Patanjali, both these counters are seeing strong buy flows on the DI desk, and delivery volumes are also expected to be on the higher side. And lastly, when it comes to Lupin, there are buy flows on the large HNI desk. Dealers are expecting strong Q4 numbers that could come in from Lupin side. So keep an eye out for that counter as well. And lastly, we did mention about Bajaj Consumer on April 15th, where dealers were indicating that the fourth quarter numbers would be quite strong. In fact, the PAT would be one of the highest in multiple quarters, and that is what has come out for Bajaj Consumer. In fact, at one point of time, the stock was up as much as 15% in trade.
Oh yeah, in fact, you are seeing that khabar absolutely confirmed with the results looking quite robust, and we spoke a bit about it and the impact that it's had, a second order impact actually on the entire FMCG pack with a 10% uptick on the stock. Kunal, on charts, is Bajaj Consumer going to see a further upside, or is this time to take profits if you've been holding?
I think definitely if you have been holding from the lower levels, definitely try to book profits at the current levels. So we have seen a good run up into the stock, and I think you will get a good dip on the downside to again accumulate the stock. The larger term trend is positive, but this has been the extension of the up move. So utilize dip as a buying opportunity. If you are holding from the lower levels, continue to book profits on every rise.
Okay. If you're holding from lower levels, continue to book profits. But what's happened in the results? They've delivered a strong Q4 with revenue up 30% and profits more than doubling. In fact, Mahima joining in to tell us what's worked for Bajaj Consumer this quarter.
So, stellar set of numbers coming in for Bajaj Consumer. I think it's a good opening for FMCG sector as a whole. Overall, I think almond hair oil is something that's been doing well for the company and has done very well this quarter as well. Double-digit volume growth coming in. Growth portfolio has now crossed 200 crore mark. 225 crore is what it has done, and volume market gains have also been recorded across these products. General trade has outperformed organized trade. That's something which is new coming in for FMCG counters. Rural has continued its recovery, and international business has also shown sequential improvement. Now, in terms of where numbers go, revenue saw an uptick of 30%. EBITDA has more than doubled at 76 crore. EBITDA margins stood at 23.4%. This is on the back of a lot of raw material price changes that have happened overall for this particular counter. Net profit has almost doubled to 63 odd crores. In terms of key raw material changes, like liquid paraffin has seen a higher uptick, but overall refined mustard oil has seen a downtick of 1%, and copra price has seen a downtick of around 16%, and this is the case in the past 2 quarters as well, and that's benefiting the company overall. In terms of guidance, they've said that the growth portfolio will cross 500 crore mark in the next 3 years, and management expects to deliver double-digit revenue growth as well. So this is the overall view as to how Q4 has panned out for Bajaj Consumer.
Got it. All right. Thanks so much, Mahima, for that. Avinash, I want to come to you. We've already discussed FMCG with you. So let me open up the ambit a little further and ask you about the wider consumer consumption universe. To ask you about consumer durables, perhaps, or even extend it to automotive, where you've seen a few flashes of upside. Would you buy into any of the names that you find high conviction? Are there any opportunities that you see there?
No, I think, from the auto pack, we still continue to be positive on the four-wheeler companies like Mahindra and Mahindra, Tata Motors, CV. So, these are companies where I think Q4 is going to be extremely strong. And I think hopefully, the demand momentum should continue in the coming quarters also. I think to a large extent, M&M should also benefit because, their electric vehicle basket of vehicles have also taken off pretty well. Tata Motors CV, I believe that it should be a big beneficiary of the CV cycle. I think we have seen CV numbers improve significantly, and that should benefit Tata Motors CV. Overall, I think even the two-wheeler pack, Alex, looks quite strong. I think, we have seen very strong product launches and good volume growth in the month of March for players like Hero Motor or TVS Motors. So definitely, I think even the two-wheeler pack should do well. I would believe that, you're talking about consumer durables, then I think even companies which are into the air conditioning and refrigerator segment, these companies should also do well because the summer has started early, and I think April to June also is going to be a hot period. So, definitely volume growth is going to be significantly better. Last year, I think the summer season was impacted badly. So the numbers are not all that great. But this time, I think you could see very strong numbers from, larger ODM players like even Amber. And definitely, I think, this is a space where you could see good traction in their earnings over the next 1 or 2 quarters.
quite a few of these stocks are actually climbing to the high point of the day, as is the market. Avinash, Kunal, thanks so much for taking the time. Pleasure speaking with you. Just pull up the Nifty 50. We're trading at very close to 24,350. And the broader market's also at the high point of the day. 1.2% gains for the mid-cap index, 1.5% gains for the small cap index, and it's a pretty picture heading into the end of the trading week. On the other side, we'll get you the top buy today, sell on Monday ideas, so stay tuned.
GHV Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit.
Welcome back. You're watching India Market Close, and as we were pointing out to you before the break, we are at the high point of the day. The question is, where do we head from here? And we're joined by Jay Bala, founder and chief market technician at Cash the Chaos, as well as Siddharth Khemka, head of research wealth management at Motilal Oswal Financial Services. Gentlemen, thanks so much for taking the time, and good afternoon. It's a Good Friday, and you can always celebrate Good Fridays. It's a good thing to look at, particularly in the context of the last few weeks. Jay, where does that take us heading into next week? Do we head towards higher levels, towards 24,000, or is it too early to call?
Hi Alex. See, the markets are heading for fresh record highs. So that I anticipate the Nifty to be at about 28,000, 29,000, somewhere about August to September. So the very short term, the Nifty has strong resistance around the 24,570 to 24,750 area. So in the immediate term, there could be some resistance, and we could even see a pullback closer to 23,500. That wouldn't disturb the higher term picture, the path I've given to you. So from here on, dips are likely to be buying opportunities. So I'm anticipating Nifty to reclaim fresh record highs past 26,373 registered earlier in 2026.
Jay, very good afternoon. Tamanna here. What are your picks for this afternoon? What are you liking?
I like two. One is Cabra Extrusions. It's a slightly medium-term call. The stock is bottomed from a falling pattern, and the low of the pattern is about 180. I don't think that's the stock is going to go below that. So I'm anticipating the stock to rally to fresh 52-week highs from here on. So a stop loss of 180 on Cabra exclusions. That will be the right stop loss level for it. And the second one is Aarti Industries. The stock had a good rally between January and February, and then it's pulled back in a choppy fashion. And from here on, it's likely to rally to about 520, possibly higher targets. But I'm sure the stock is not going to drop below 394. So that can be a risk management level. And these two are slightly slow movers, but these are interesting stocks for me.
Okay, Siddharth, I want to ask you specifically about banks. And ahead of the results that are going to come, the big two, HDFC and ICICI, I would say if the tone has been set for IT with TCS and Wipro to some extent, it's going to be set by tomorrow for private banks and the whole banking space. What are your expectations?
So yes, Tamanna, I think that's the key sector, especially when the sector's weightage as well as contribution to the economy is huge. So key factors, if you look at credit growth, the systematic credit growth is around 13-14%. That is pretty steady. Deposits growth, which has been a key factor, especially for some of the large private banks where they were lagging behind, that has picked up in the last couple of quarters. And for this quarter, we are expecting about 10.8% deposit growth, which will help the CD ratio to improve to about 83%. NIMS is largely range bound, but we believe that bottoming out of NIMS will be a key factor in the ensuing quarters, and we should see the improvement in NIMS going forward now that with the RBI maintaining a status quo. In that, some of the mid-sized banks, they are better placed both in terms of growth as well as in terms of NIMS. Asset quality continues to remain steady. In terms of private banks, we expect Q4 earnings to grow at about 12% on a low base, plus better contribution from some of the larger banks, the likes of HDFC, which is now started contributing in a stronger way. PSU banks on a higher base, the Q4 earnings is likely to grow just about 2%, but SBI is something that will continue to report strong earnings growth in this quarter as well. So in terms of strong earnings, SBI, ICICI on the large cap side will report strong numbers. In the small finance or small banks, I think AU Bank, that is expected to report a healthy growth as well of around 19-20% net profit growth. So that's the overall view on the banking space.
You know, since we're talking about the banking space, another piece of news which is keeping the banking space up and about, and let's pull up the bank Nifty, and we were telling you about that sharp uptick, is this report which has come out on the DGFT allowing 17 banks to import gold and silver. Out of them, 15 can import both gold and silver, 2 can import just gold. But this is a major relief for banks, which is why you're seeing that bump up as well. And let me get across Rishabh Bhatnagar, who's joining in for more details on how these imports which were blocked have now been unblocked. Rishabh?
Right, what we have is a notification that is coming from the Director General of Foreign Trade, what they've said, and finally, after a delay of about 17 days, have issued a notification that has authorized about 17 Indian and foreign banks to be authorized to be importing gold and silver. The entire fiasco was the fact that this authorization hadn't come in from the DGFT. It was supposed to come in on the 1st of April. We don't know why this delay happened, but there were clarity that had come in from RBI, but these shipments were stuck at several points, given the fact that the DGFT hadn't authorized these imports. What we're also seeing is the fact that finally this notification comes after about 2 large banks had made pleas to the RBI asking them to authorize these imports. These imports are a major source of course, firstly meeting the sort of demand that India has for these precious metals. Also, it is to keep in check the sort of current account deficit, and these precious metals, gold and silver, with the recent appreciation also do act as hedges against global uncertainty even for banks. So that's what we're picking up. These shipments were stuck since April 1st. The previous list had expired. The previous authorization had expired on March 31st, and banks are required to have these authorizations from DGFT, RBI as well as customs. So that's what we're picking up in terms of this DGFT related blocking of gold imports.
All right. Thanks so much, Rishabh, for getting us those details. So that important clarification coming through, and it's having a bearing on the gold companies as well, because ultimately India is a large importer of gold and therefore price taker. Any implications that you think of with regard to supply chain for some of these jewelers?
Yeah, I think the supply chain will only improve with the easing of the import restrictions. I think that will only help some of these companies and create a better environment. So that's the only thought that comes to my mind right now. I think overall environment will be much better for jewelers, for some of the other companies in the entire supply chain.
Any of the jewelers that you're favoring as we're seeing that uptick coming in, Siddharth?
So yeah, I think we have seen the Q4 business updates from all of them pretty strong. And among them, I think Titan is something that has remained our top preferred idea in the consumer overall consumption discretionary theme, retail theme. And they continue to report strong earnings growth. Q3 was a blockbuster quarter. Despite the high gold prices, demand has been pretty strong, and we believe that Titan continues to benefit out of its superior sourcing strategy, their diversification, both in terms of gold as well as the studded jewelry segments. Plus, they have been reinvesting in a lot of other sub-brands, newer brands, which can become future growth drivers. So within the large cap space, this is one company or one stock which has consistently delivered earnings growth. And even going forward, we are forecasting at about 25% net profit CAGR over the next 2-3 years. So that's the preferred pick there in the space, Titan.
Preferred pick is Titan. Are you liking Titan on the charts? Jay?
Yeah, Titan has got a very, very positive price structure, and it's still got further highs to come through. But the strongest for me is Thangamile jewelry, but it's had a sharp run up, and probably better off waiting for some pullback to come through and then pick up the stock.
Okay, you like Thangamile jewelry as well. Okay, the big story, of course, billionaire industrialist Gautam Adani, chairman of the Adani Group, has become Asia's richest individual, overtaking Reliance Industries chairman Mukesh Ambani, according to the latest Bloomberg Billionaires Index. Sharad is joining in with more details.
Well, right, for Adani Group chairman, Gautam Adani has become Asia's richest, and this is as per Bloomberg Billionaires Index, and he has overtaken Mukesh Ambani to take the top spot in Asia. Now, Mukesh Ambani slips to the second position as being the richest in Asia. Also, let's look at the numbers. What does it suggest? As per Bloomberg Billionaires Index, the net worth of Gautam Adani is $92.6 billion. That's making him the richest in Asia. This net worth shows a sharp upward move and has added almost $8.1 billion in terms of wealth this year itself. This is the total numbers we are talking about. Over here, Mukesh Ambani's net worth has reflected a decline, and Mukesh Ambani's wealth has declined by roughly $16.9 billion this week itself. And this data is coming in from the Bloomberg Billionaires Index. Over here, two Indian billionaires sit side by side on the Global Wealth Index, and Gautam Adani's ranking is at 19th in terms of the total richest persons in the world, followed by Mukesh Ambani just behind in the 20th spot. But now let's look at how the global numbers stack up. Elon Musk, he maintains a staggering lead as the world's richest individual, and the gap between the first and the second and third is really very big. Now, the net worth is $656 billion, more than double of the second placed Larry Page, and that's a very interesting data coming in from the Bloomberg Billionaires Index. Now, let's look at the Adani Group of stocks, how they have performed. They have grown 11 to 30% in the last 1 month itself. Let's look at the stocks.